140 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index back in the green, barely up now by just about 1 point. Dow Jones Industrial Average, though, also trading higher, holding on to a gain of just about 300 right now, up by 0.7%. But NASDAQ in the red. NASDAQ Composite Index down 34 now. For NASDAQ, that is a decline of just about 0.2%. Russell 2000 Index of small cap shares surging. We've got the Russell 2000 up by 1.5%. Right now, spot gold up $67 the ounce, or actually down 67, down 2.5%. Gold 26.17. West Texas Intermediate crude down 3.1%, 68.17 a barrel. And Bitcoin, major story today, now surging by 6.8%, 85,339 on Bitcoin. Crude oil extending declines as a soft outlook for demand in China, the world's largest crude importer, continues to plague the market. I mentioned the crude was down 3.1%. Oil stocks also lower. Case in point, ExxonMobil down now by 0.5%. ADRs of BP down by about 0.1%. Chevron now lower by 0.2%. Again, recapping, Bitcoin up 6.8%. The S&P holding on to a gain of just 1 point. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you, and great to have you with us here on the Monday edition of Balance of Power. We're back on Bloomberg TV and radio from the nation's capital, back from world headquarters in New York, following many days of counting votes, and we're not done yet. The House has still not been called this week after. We've got nearly 20 outstanding House races, a lot of them in California, where the balance of power will be decided, and it's looking like it will be decided in favor of Republicans. Of the 19 races still not called, Republicans only need to win 5. Democrats need to win 15. That's where we are in sports. Brad Howard, an expert on all things House, joins us right now from his perch at Corcoran Street. Brad was a chief of staff in the House, Stephanie Murphy, as a matter of fact, who you see quite often on this program, the Democrat from Florida. A blue dog Democrat, had floor privileges, and knows exactly what this moment is when we're trying to find out who's in charge, who's going to run the committees, will there be a power-sharing agreement? All of this stuff is still possible, by the way, because if you were listening closely to what I said, Democrats actually could still win the House. We could still have divided government. It's just a less likely scenario with the paths that we're seeing right now. But following our conversation with Kevin Roberts, I wonder what Brad Howard has to think about our conversation about the working class, about why things went the way they did last week. And glad to see you right now, Brad. It's my first chance to compare notes since the election, and I hope that you're doing well. Before I get into the big picture stuff, just give me your read on the House. Are you giving this to Republicans, or you're waiting for every vote to be counted?
Well, you know, we should wait until we at least have a call on the remaining races, at least enough to determine if there's 218. But it does remind me of that scene in Dumb and Dumber where he's like, you've got a 1 in a million chance, he's saying. So there's still a chance. So I'm still hoping. So, you know, look, I do think the Republicans had a great night. I think the Democrats have got to figure out you know, what the problem with our brand is. And I've heard too many of my own party try to say, well, America is racist, or it's, you know, misogynistic, or, you know, they didn't know how they were voting, or they're tricked by the conservative media. And if your premise of this is entering the conversation with assuming voters were somehow tricked or duped, then you're never going to learn the lesson. The Democratic brand was resoundingly rejected in nearly all demographics, and we have to figure out why. And the conversation's got to start with not with blaming voters, but with understanding voters. And, you know, it's, as a party, it's our responsibility to go to the voters, not to sit here and expect voters to come to us. And until we figure that out, we're going to continue to lose. And so I hope that we look to the Blue Dogs for a lot of the answers. If you look back, some of the closest races in the country, Jared Golden of Maine and Marie Gluesenkamp Perez of Washington State, were Blue Dog co-chairs, and they won. They outperformed the Democratic ticket wildly. We're still waiting on Mary Peltola in Alaska and a few of the Blue Dog endorsed candidates in California, but so far the Blue Dog incumbents have held up very well.
Well, interesting. So with your Blue Dog hat on, I want to spin back to the conversation we had earlier this hour with Kevin Roberts of the Heritage Foundation. He's out with a new book, Brad, you might have heard about. He's, of course, the driving force behind Project 2025. And he writes in his foreword for the project that many elites, use the term elites, entire identity, it seems, is wrapped up in their sense of superiority over the working class and what he refers to here as parents at a high school football game in Waco, Texas. Under our Constitution, though, he says they are mere equals of the workers who shower after work instead of before. It's actually pretty good writing. And it sounds a heck of a lot like Pramila Jayapal, who says we've become a party of elites and talks about the working class abandoning the Democratic Party, or is it the other way around? What does it tell us when the two ends of the political spectrum come around and meet in this way in the narrative?
Well, there's no doubt that there's a populism streak running through the American people at the moment. And I think Democrats have a couple structural problems that are plaguing our party at the moment. I think we've got to stop letting kind of young, college-educated, white, urban liberals dictate to the rest of the party, particularly in the socialist shoes. There's rapid change right now in the American society, from automation to technological to social civil rights movement. There's a lot coming at people, we've got to understand why some of them can't move as fast as we would like, and we have to have patience, and we have to come with them. I think the second thing is, you have a big disconnect in the organized labor movement. You have the national chapters, which are adamantly Democratic and work with the Democratic Party, and you have the rank and file, which, as we've seen in this election, and the working class swung wildly to Trump. So if Democratic Party leaders are listening to the national labor chapters, there's a big disconnect there. And if we're listening to them but getting none of their votes, then something's off kilter. And so we've got to ask the questions about why that disconnect is there and start listening to the rank and file union members that are out there in the country. And they're telling us what they want, right? They're telling us they resent the fact that if you have a college degree, it means you can't be successful. They resent the fact that the rich are getting richer and the hardworking Americans are getting ahead. I think Democrats ignored the alarm bells around inflation too late. And when we finally did, the American people said, well, if you can't even acknowledge that there's a problem, why would I like you to fix it? And keep in mind, Donald Trump won with one very simple premise. It's been the same premise he's had since 2016. Things are broke, and I'm going to fix it. And the Democrats didn't have much to come back with. We didn't have a consistent message. And the closing visuals of the campaign were Trump wearing an orange worker's vest, driving a garbage truck in a McDonald's. Kamala was with Beyonce and in the Ellipse in Washington, D.C. So I think we need to look at our messaging. We need to look at who we're listening to and who we're talking to, and we've got to have some tough conversations. I think everybody's right and everybody's wrong. So there's a lot to look at.
Great analysis. You used the word resent, Brad. Bernie Sanders used the word angry in his interview on Meet the Press yesterday. Let's listen.
The working people of this country are extremely angry. They have a right to be angry. In the richest country in the history of the world, today, the people on top are doing phenomenally well, while 60% of Americans are living paycheck to paycheck. Where is the Democratic Party? Are they prepared to stand up to these powerful corporate interests, raise the minimum wage, fight for health care for all people, make sure that all of our kids get the quality education that they need, expand Social Security?
Of course, he's an independent, not a Democrat. But Brad, how come it's so easy for everyone to have this conversation today instead of last Monday morning?
Well, I think, number one, I want to point out that Kamala Harris got a higher percent of the vote in her race in Vermont than Bernie Sanders did in his. So first. And number two is that Bernie's already trying to prescribe solutions. And this is part of the problem with the Democratic Party. The solutions we're prescribing, like, Americans generally support, but they don't like us. You saw in states where they voted to codify abortion rights, but yet voted for Donald Trump. They voted to codify paid family leave, but voted for Donald Trump. So what's it tell you when they generally like our solutions and our policy positions, but they don't like us? That is a branding and connection problem. Like, you cannot show up in the Black and Hispanic communities 2 months before an election and expect them to listen. It looks the way it is. It looks like you're pandering. And so we've got to build inroads in these communities. We've got to get off these college campuses and we got to get out of the boardrooms and into the break rooms. We've got to really have conversations with these workers. And I think number two is the resentment is, so when you look at, for instance, the Biden college student loan debt relief, the people that have worked hard their whole life, who passed on the fancy vacations, who passed on the fancy cars and fancy houses, and scrimped and saved to put their kids through college, and then yet they see their neighbors who, lived irresponsibly all of a sudden get a check from the government, they're forgiven. That builds resentment. I'm not saying it's bad policy. I'm just saying it builds resentment. And so we've got to understand that there's a populist streak in the government, in the electorate right now, that's looking at an unfair system. And when you think the system is unfair and it's broken, you're going to go to the guy that's telling you he's going to fix it. You're not going to go to the party that's that's refusing to acknowledge anything's broken. And when we said defending democracy, I think a lot of voters took that as defending the status quo, of defending the broken system. And I think that backfired on us.
Wow. I hope everyone understands here that people are going to be hiring Brad Howard for the next 2 years to explain this to them in a room. And you're getting it right now on this Monday here on Bloomberg. Brad, you're a creature of the House. Bring us inside what's about to happen here, because Hakeem Jeffries is going to either have a razor-thin majority or he's going to lead the party of the insurgency. Which one is actually more impactful? Which one's easier?
Well, I mean, obviously being the minority is always easier. The response of governing is hard, and Republicans have figured that out this last 2 years. What I will say, what this does, we know it's going to be close margin regardless of who wins, right? That's for sure. What that does is that actually empowers groups like the Blue Dogs on the Hill and the moderate Republicans, the Republican governance groups, so to speak, because we've seen that the far right, the kind of what we call the right-wing MAGA crowd, doesn't want to govern. And so, Speaker Johnson has struggled over the last year and a half to put together a group of Republicans that can pass a rule to put things on the floor as simple as funding the government. And he's had to rely on Leader Jeffries to deliver Democratic votes so they can govern. I suspect that's going to continue. And so really the kingmakers here, regardless if the Democrats have the majority or if the Republicans have the majority, it's going to be groups like the Blue Dog Democrats, of which I know well, and the New Dems, of which I know well, and the Problem Solvers Caucus. Like these moderate coalitions, you talk about a power sharing agreement, there won't really be a formal one. There's always an informal power sharing agreement that determines committee sizes and stuff, but there may actually be forced into an informal power sharing agreement, because if the far right is never going to vote to allow Speaker Johnson to bring responsible legislation to the floor, he's going to have to rely on Leader Jeffries. And Leader Jeffries has shown that he will put the governing and the American people over partisan politics. And I'll add too, Leader Jeffries, you got to remember, didn't force all the Democrats to vote a certain way in the last 2 years. He's allowed them to vote as they need to vote. So when they come together, he's in a strong position to help this Democratic Party heal. And because he allowed people to vote the way they need to vote. So he's going to be a great leader and resource to turn to as this party emerges and figures out where to go forward.
Well, that's why I asked what might have sounded like a weird question, because Speaker Johnson, if this is in fact going to be a thin Republican majority, will need Hakeem Jeffries. He will need Democrats to get things done, which makes him enormously influential in the minority, doesn't it?
Yeah, and keep in mind, like when I was chief of staff to Congresswoman Stephanie Murphy, she was leader of the Blue Dogs. When we came in, Republicans had full control of government. They had the House, the Senate, and the White House. This was in 2017. So, I have a lot of experience personally navigating to being a Democrat, in a year. But to your point about why now people are having these conversations and we haven't really had before, you got to keep in mind when Trump won in 2016, it shocked everyone. And a lot of people chalked that up to, well, Hillary won the popular vote. Well, Russia intervened. Well, it was the James Comey letter, right? And so we never had the discussion, the hard lessons, because we thought we won. And then you go to 2020 and they did win. And I think we took the wrong lesson from both of those. And so this is the first time in 2 presidential cycles that we've had a tough conversation internally as a party. And I think what caught a lot of people off guard, I think all the polls show that Trump was a slight favorite to win, and he did. But I don't think everyone suspected the incredible growth and support he had across nearly every single demographic, and a clean sweep of the battleground states. And even you look at areas like Cook County, Illinois, where Chicago is, he had a 12 to 15 point swing, double-digit swing in his favor, which is just, you got to really think, if we're losing the heartland and we're losing votes in urban areas, what is left?
Absolutely incredible, and such great analysis by Brad Howard. I can't thank you enough, Brad, for the deep dive today. He's at Corcoran Street Group, where he is the founder and president, as mentioned, former chief of staff Congresswoman Stephanie Murphy. Great to see you, Brad, this Monday after the election. We're still in the throes of the postmortem. And yeah, we're still in the throes of the count, as you just heard us talking about a couple of moments ago. 19 races still to be called in the House. Some of those may be called between now and the time we meet again at 5 p.m., the late edition of Balance of Power. We also are waiting for a call in the U.S. Senate. One more, the state of Arizona, where Democrat Ruben Gallego is leading Republican Kerry Lake. These all could come at any time, and you'll hear about them when news breaks, of course, immediately, right here on Bloomberg. For Kaylee Lines, I'm Joe Matthew, live in Washington on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everyone. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week. I'm Tim Stenevec. That's Emily Griffeo of the Bloomberg News Cross Asset Team. Carol Masser out. Emily here in her stead. Emily, what's on your radar today?
Well, bond markets are not. Those are closed, Tim. But just like Charlie Pellet said, Bitcoin is absolutely soaring. A little bit more excitement there when you compare it to the S&P 500, which is basically unchanged, Tim.
Yeah, I'll tell you what, you type in CRYP Go on the Bloomberg terminal and all you see is green there because that is the mood when it comes to cryptocurrency. Things in the equity market a little more muted. Mixed market. We're going to have more on that in just a minute when we do hear from Charlie Pellet. But as you mentioned, Emily, crypto just still surging, another new record for Bitcoin. It's gained, I wrote this earlier, so it's more than this, but as of earlier, it gained more than 26% in just the last week over that optimism over a Trump victory. And pro-crypto lawmakers, we're going to get the latest from our senior editor on the crypto desk about what exactly is going on and what all these bulls are hoping for in a Trump administration.
Also, Trump has said he can end Russia's invasion of Ukraine in a day. Our own Mark Champion at Bloomberg Opinion says that Trump doesn't have to be bad news for Ukraine, Tim.
And it's today's big take. It's the Wall Street math wizards who are decoding private market returns. We check in with our correspondent over in London for a look at the opaque markets. We're talking about private markets, of course. Now that and more over the next hour right here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here's Charlie.
Hi, thank you very much. Got to begin with Bitcoin because it is closing in on 86,000 as I speak. 85,835 on Bitcoin right now, surging by 7.4%. Again, worth repeating, Bitcoin right now, 85,878, up by 7.5%. U.S. stocks trading mixed. We have got the Dow, the S&P, they're both higher right now. S&P little changed, up by about 2 points. NASDAQ, though, in the red, giving up earlier gains, down 21 right now, down by about 0.1%. The Dow holding on to a 317-point gain, up 0.7%. Russell 2000 index up 1.5% right now. Spot gold down 65, drop there of 2.4%. West Texas Intermediate crude down 3%, 68.28 for a barrel of WTI. Again, cannot ignore that move in Bitcoin, something we will be watching for you throughout the day on Bloomberg Television and Radio. Bitcoin right now up 7.5%. Cigna Group says it will not be pursuing a combination with rival insurer Humana after reports the two companies had renewed discussions of a deal. Cigna shares, they're up 7.8%. Humana down now by 1.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, thanks so much for that update. Really do appreciate it. Well, we begin our program this afternoon trying to understand how Trump's second term will affect international affairs, namely Russia's invasion of Ukraine, which Trump has said he can end in a day. On that, the Washington Post reported earlier that Putin and Trump spoke on Thursday and discussed the goal of peace in Europe, citing people with knowledge of the matter that it didn't identify. The Kremlin, however, denied that report that President Putin had a phone call with Trump. Mark Champion is international affairs columnist for Bloomberg Opinion. He just got back from a pretty extensive trip to Ukraine. He joins us from London. Mark, you write that the president-elect and his team need to rethink what winning and losing in Ukraine would mean. What do they think winning and losing means, and how is that different than how they should be thinking about it?
Right. Well, if you listen to the people around him, Elon Musk, who was on the phone call with Trump and Zelensky, and then, the vice president, J.D. Vance, Trump himself has also said, had some kind of top line comments that basically say, look, we don't have any significant interests in Ukraine, and we need to end this quickly, and we're not interested in continuing, military support for Ukraine. So that's the kind of, starting point. There have been a bunch of plans that have been floated talking about, let's put some peacekeepers from Europe along the ceasefire line, and you just get a ceasefire along there on kind of current lines, and see where we go. The problem is that this, omits what it is that Putin wants. And if you look at the comments that he's been making, his spokesman's been making, people in the Duma have been making, they're basically saying, we want exactly what we set out to do at the beginning, which is a demilitarized Ukraine, a denazified Ukraine, which basically translated means we want regime change and, someone who we like in Kiev. And they are very, they're not willing to talk about giving up any of the territory that they have claimed to annex, which is more than they have actually managed to conquer so far. So very extensive demands, not interested in a ceasefire. And the concern in Ukraine is that these will be the parameters for a negotiation where what will look like a compromise is something where, Putin might say, okay, I'll give you the ceasefire along current lines, but I need, Ukraine demilitarized. I have to be absolutely sure that Ukraine's not going to join NATO. You have to stop providing it with weapons, demilitarize, perhaps along the lines of a deal that, came close to being made, but actually I think was quite far because the red lines included, the terms of demilitarization. And that was to reduce the armed forces of Ukraine at the time, this was in 2022, to 80,000. At the moment, they've got hundreds of thousands under arms. And with a force of 80,000, Putin could restart his invasion at any point and be certain of winning.
Right. So, Mark, you just returned from a coal mine in the eastern Donbas region, which is a hot focus of the war. What is this mine? And tell us more about what you found there.
Yeah, it's a very interesting place, essentially. It's now just less than 20 kilometers from the Russian front. And it is a coking coal mine. So it's not the kind of coal that, you use to burn, to generate electricity or any of that sort of thing. It's what is used. It's the essential ingredient for making steel. It provides the carbon that hardens steel. It is the only one in Ukraine. It provides, 60% of all the coking coal in Ukraine for the steel industry. And if it were to disappear, the estimate is that Ukraine would, about half its steel output would become uncompetitive. This is the steel with which they're making weapons. It's the steel that it would be essential to reconstruction. There'd be a massive boom in demand for steel at that point. So it's, and what was interesting to me, and the reason I made the trip was I met the CEO, a guy called Yuri Rishenkov of the steel company, Metinvest, that owns the mine, over dinner in London beforehand. And, I asked him, what do you need? You must really want a ceasefire fast because it's only the mine has already been hit several times by missiles. And it is essential to you. And he said, well, I do, of course, for our own purposes, for the safety of our staff and all those things. But we can't really have one and don't want it on terms that wouldn't include a definitive end of the war, which requires, the security terms, either NATO membership, a kind of Israel arrangement, a South Korea arrangement, something that means that the war has ended, and not something like we had in 2014-15, which was, a ceasefire just along the existing lines. And that it just invited Putin really to break the ceasefire and begin his invasion in 2022. So he doesn't want that, primarily because he can't invest in those circumstances. He can only start investing, new plant and so on. He's already lost 2 steel mines in Mariupol at the beginning of the war, and he can't really start investing until there's a definitive end of the war, so he knows that whatever he builds isn't just going to get blown up or overtaken. And you can imagine if, one of Ukraine's largest companies isn't willing to invest,
right,
foreign investors won't come, refugees won't come back. You don't have a viable state or a viable economy.
Hey, Mark, we only have 30 seconds left, but Mike Pompeo, former Secretary of State, we learned over the weekend that he will not be invited in the Trump administration. You note that this is one of the few people in Trump's orbit who does have experience with international affairs. Who's going to be running the show, in your view?
Well, I'm not the one to ask about that. We have people who, really follow the ins and outs of, the Trump administration in Washington. All I can say is, Pompeo was one of the few people, not only who had experience, but also was a regular visitor to Kiev and did understand the situation there. So, it's going to be, you got to hope that it isn't going to be someone with no experience who has, never been to Russia, never been to Ukraine, and really, is basically talking political talking points, at home, and translating that into foreign policy.
All right. Really appreciate you joining us, Mark. That's Mark Champion. He is international affairs columnist for Bloomberg Opinion, joining us from London. Check out his columns at bloomberg.com/opinion, also at OPIN Go on the Bloomberg terminal. Well, from international affairs to crypto, because that's something that's certainly getting a lot of attention post-Trump's victory. Bitcoin rallying past $86,000 for the first time ever, boosted by President-elect Donald Trump's embrace of digital assets and the prospect of a Congress featuring pro-crypto lawmakers. For more on the trade, we're joined by Mike Regan. He's a senior editor for Bloomberg News. He joins us here in the Bloomberg Business Week studio. Help us make sense of the optimism here. Why exactly are bulls so excited?
Well, I think you sort of nailed it with the Trump victory. If you go back to July, when Trump really was front and center in the crypto world, he spoke at the Bitcoin 24 conference, and he made a lot of promises to the crypto community. But to me, the most important one is he has plans for what he calls a strategic stockpile of Bitcoin.
Like a strategic oil reserve for
Bitcoin. Yeah. And the U.S. does have other sort of strategic reserves, for different commodities over the year. I think, no one expected we'd ever be talking about a strategic reserve of Bitcoin. But in this political environment, you look at the money that was spent by the crypto lobby, their super PAC called Fair Shake, something like $130 million on congressional races. And they managed to elect pretty much most, if not all, the candidates they wanted. But
using messaging that was not at all related to crypto, we should note.
Right. But it's that money, if you put that target money into certain congressional Senate elections, it can have a big effect. Yeah. So the political mood for being sort of anti-crypto at all right now is not very high after that election. Now that, the question is, what does he mean by this Bitcoin reserve? He, the day before Trump spoke, RFK Jr. spoke, and said, I heard Trump's going to announce a plan to buy 1 million Bitcoin for this reserve. Now, put that into perspective. That's $85 billion worth of Bitcoin at this price point. Cynthia Loomis, the senator from Wyoming, actually spoke after Trump. Now, Trump fell short of that promise at his speech to the Bitcoin convention, but Cynthia Loomis, the senator from Wyoming, came after him and was basically presenting a draft of a bill that she had to do exactly that, buy 1 million Bitcoin. So, the question I think that's lingering over this market right now is, will that really happen? Is there really enough support in Congress for spending $85 billion at these prices? Tomorrow it could be $90 billion, $100 billion, depending on where these prices go over the next few years to buy crypto. Because if the market knows that the government's coming to buy, well, the sky's the limit for the price. So, will Congress really, are they influenced enough by this crypto lobby to actually go for that? I think is the big question hanging over this rally. But, clearly there's a runway of time before Trump comes in and before we really get a sense of his priorities, where this is sort of the driving theme. And it's almost impossible to find someone who's bearish on Bitcoin and crypto in general because of this sort of enthusiasm from the next administration towards crypto.
What about not just enthusiasm, but how much do we know about whether the new administration is actually going to provide a regulatory framework more than what we already have in the crypto industry and kind of promote bringing the crypto industry into the U.S.? How much of the optimism in Bitcoin's price is kind of reflecting that?
There's certainly some of that, too. Trump has promised to fire Gary Gensler and appoint crypto-friendly regulators. Now, it's an open question. A lot of legal experts think he doesn't have the power to actually just fire Gensler, but he certainly, can exert as much influence as he can to try to get him to quit or whatever. Trump often deals in sort of actions and activities that don't have a precedent. So it's hard to say exactly how far he will push the envelope on that as far as just appointing new regulators. Now, there's any number of crypto bills floating around Congress that have just kind of stalled out in the process. So I think there is a chance that we could see sort of that logjam clear even before the end of the year. There was some hope that the stablecoin bill is the big one. The crypto tokens that are worth exactly $1. They're very, very important to the market. And, there's a bill floating around to sort of set the regulatory guidelines for them. That would kind of be the first one that we would look to happen. But, it's kind of a blank slate now as far as what the regulatory environment will look like in the next administration. So it's a great question, and we're just going to have to stay tuned and see how it all progresses.
I'm wondering what would change the mind, in your view, of the folks who are so bullish right now. You say it's difficult to find a bear out there, given the way that the scenario has changed just in the last few days.
Yeah. To me, that question of the Bitcoin reserve is really the one that's lingering over the market. Trump has a very long agenda of things he wants to accomplish. Where that sort of making good on the promises to the crypto community, where that lands on that list of priorities, I think is the most important thing. If you get into the new year and there's a few weeks, months, and you don't hear him talking about it, or there's not really much action going on in D.C. to create this Bitcoin reserve, then I think people are going to start questioning. That's a big deliverable to the crypto community from Trump, and I think he's got some time. Obviously, he can't do anything until he's in office and the new Congress is seated. But where that item lands on the priority list for Trump, I think will really determine when and if this market starts to crack.
One thing that's pretty remarkable to me about the election is just how powerful the crypto lobby was.
Yeah.
In this case, especially in the sense of running ads that were not at all tied to crypto in order to elect candidates who were pro-crypto. Their record is incredible for this past election.
Right. And they've already started to fund the PAC for the midterms. This lobby, this super PAC, Fair Shake, it's not going anywhere. It's incredibly powerful. I believe that was the biggest source of corporate funding to congressional campaigns in this last election. So, memories are short. Not everyone, is really focused on the FTX days and all the blowups that we saw a few years ago.
Yeah, that's what I like. If something like that happens again, or if consumers are indeed harmed by certain projects that are out there, by certain products that are out there, then does that shift sentiment at all?
I think it could. Yeah, I think it certainly could. Knock on wood, the last trailing year or so has been, as far as crypto projects and exchanges and companies blowing up, it's been pretty smooth sailing. So I think that helps to sort of, create this atmosphere of complacency towards this market that, has a pretty volatile history. And, you ask what could change the price action. That's the thing. It's a very unpredictable market. I mean, over time, it's obviously expanded exponentially. But the price of Bitcoin has just been astounding over its history, but not without major drops and bear markets in between. So I do think a dip in price could sort of change the sentiment about how laissez-faire the government wants to be towards this whole asset class, for sure.
Mike Regan, Bloomberg News senior editor over on the crypto desk. Thanks so much for joining us on Bloomberg Business Week. Coming up next, House Republicans, they are on the brink of clinching unified GOP control over Washington under President-elect Donald Trump. A view from the Senate and the House. That's next on Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index up barely, up now by 2 points. Dow Jones Industrial Average holding on to a gain of 327 points, up by about 0.7%. NASDAQ, though, in the red, tumbling 23 points, down 0.1%. The Russell 2000 index of small cap shares, though, by far the outperformer, up today by 1.5%. Spot gold down $65 the ounce, down 2.4%, $26.19 the ounce on gold, while West Texas Intermediate crude $68.16 a barrel of WTI, trading lower now by 3.1%. Bitcoin among today's big market stories, a topic we were just talking about here on Bloomberg Business Week. Bitcoin now up by 8%. 86,329 on Bitcoin. Apple says users can share a secure link with the location of their AirTag or Find My network with third parties, including airlines, in the beta version of its iOS 18.2. Apple shares today, they're down 1.7%. Again, recapping, S&P up 2 points, up less than 0.1%. Bitcoin up 7.9%, 86,210. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, House Republicans are on the brink of clinching unified GOP control over Washington under President-elect Donald Trump, awaiting wins in just 4 of the chamber's 18 remaining uncalled races. 218 seats are needed to control the House. Republicans on Monday were leading in races that have been decided 214 to 203. That's according to the Associated Press. Meantime, President-elect Donald Trump and Elon Musk moved to make demands of the next Senate Republican leader, potentially scrambling a race that has been expected to go to one of Mitch McConnell's longtime allies. Needless to say, a lot to get to. We've got with us Bloomberg News congressional reporters Billy House and Stephen Dennis. They both join us from Washington. Billy, I want to start with you and talk about the latest in the House, but specifically with Representative Elise Stefanik of New York, because she has accepted a position as Trump's UN ambassador. Tell us a little bit about what we know with this appointment and also what it means for the House of Representatives.
Well, Elise Stefanik, of course, goes way back as a Trump favorite to her defense of him in the first 2 impeachment proceedings, including very vocal defense of him during the House impeachment hearings. That has continued through the years. She has stumped for him. She has more recently stood up for him when Mark Cuban said he doesn't surround himself with strong women. She said basically, hey, what about me? In terms of her seat, vacating it, it doesn't really hurt Republicans because that is a north of Albany area district there in New York that is ruby red. She'll be, there's not much of a history there with foreign affairs. She's on the Armed Services Committee. Her district does border Canada, but she has made news, obviously, recently for her aggressive pro-Israel anti-Semitism stances against the college campuses, the leaders of those that weren't cracked down on some of those protests.
And Stephen, let's bring you here because you're writing about how the Republicans are currently deciding how they're going to put the Senate leader in charge. How is that process going right now?
Yeah, I mean, this is something we haven't seen since 2004, I think, where basically Mitch McConnell's had that job locked up for longer than any person's ever had it locked up. And so there's kind of a jailbreak here of 3 candidates running, 2 of whom were longtime Mitch McConnell deputies, John Cornyn of Texas and John Thune of South Dakota. And going into this past week, I think they were both the clear favorite. It was going to be one or the other. Well, Rick Scott in the last few days has gotten some momentum from outside sources, people like Elon Musk and other allies of Donald Trump who want somebody more aligned with Trump and his agenda. And Rick Scott has long been a key Trump ally. And, you know, it's going to be an early test here of whether Trump's going to have somebody who really has his back in that job or somebody who on occasion will push back because of resistance from some members of the Senate.
Okay, on that, Stephen, help us understand recess appointments here, because you write that Elon Musk has been encouraging that the president-elect should be allowed to make recess appointments. Remind everyone what they are and how that could be critical, at least in a timely process, of setting Trump's agenda in motion?
Yeah, so recess appointments basically haven't happened for decades because the senators have gotten together and said, well, we're not going to recess. And every few days they hold what's called a pro forma session. So they say there's no recess, and that's prevented presidents of both parties and frustrated them. And, you know, when you're a new president, you have many hundreds and hundreds of appointments to get filled by the Senate. And senators can hold them up. They can't stop them if there's a majority for them, but they can delay them. Even J.D. Vance, the vice president-elect, had held up basically every high-level nominee to the Justice Department for a period of time because he was upset with how things were being run in the administration. So this is something that senators in both parties have used and treasured. And, you know, this is going to be a real key of whether they say, okay, we're going to say we're not in session right now, and you can go ahead and make these appointments. Now, normally, in order to go into recess, the House and Senate both have to agree. That could potentially be filibustered, so a long road to go here. But this is all mostly about bypassing the Senate on getting the people he wants, even if the Senate doesn't want them. And there's a lot of other things where Trump wants to bypass Congress, potentially including what he's called impoundment authority, where he thinks he has the authority to not spend money that Congress has spent. And this is going to be, you know, this is one of many things where there's going to be a fight over institutional power and the balance of powers. And, you know, we could see these ultimately ending up in the Supreme Court deciding what authorities Trump actually has and where he has to go to Congress and get support and pass a bill. Another one is tariffs. You know, we're gonna see a lot of these things coming down the pike, and right now this is sort of the first skirmish of how much, you know, sway Trump's going to have in the Senate and whether he's going to have any speed bumps along the way.
Yeah, I mean, one thing is for certain: the two of you are going to be incredibly busy over the coming days, weeks, and yes, years, I imagine, covering the Senate and the House. Billy House, back to you on the House. Give our listeners and our viewers an update on where things stand, because it's unclear who or which party will actually have the majority at this point. Is it pretty much a done deal for Republicans, or are there some races where Democrats could actually win control?
It is pretty much a done deal. As you mentioned, they're at 214 called seats, but really because of a Democrat who's conceded her race, and one of those other uncalled races is Republican on Republican. It's really 216 to 203 now. For a majority to be, for a party to get the majority, they need 218 seats. So effectively, Republicans are only looking to gain 2 more seats to get the majority. They'll do better than that, and they're doing well in over half of the remaining 10 California seats and in a couple other seats. So the only question is, how big will their majority be? Will it be razor thin like it is currently? And as we know, that caused a lot of openings for blocks of conservatives to cause mischief in this current session. The question will be, how small will that majority be this time, and will President-elect Trump have any great hold over those conservatives to keep them from repeating their antics this session?
Billy, when you think ahead to potential policy and law decisions that are going to have to be dealt with in the House and Senate going forward, how does that margin play in? Are there any specific issues where it would be, I guess, worse off and there'd be more stagnation with a more narrow majority lead?
Well, ideally, when the Republicans have all the both the legislature and the executive branch, things would go smoothly. But again, we have blocks of lawmakers who have their own ideas on spending, even immigration. We saw that this session. Other issues like the debt ceiling will come up. So doesn't appear to be any guarantee everything will sail through just because Republicans are in control. Certainly, our history shows us that there will be hiccups and bounces. But the first one's going to be on how we approach the extended spending bill, or do we go past Christmas? Do we go into the next year with another temporary spending measure? What do we do on that?
Hey, Billy, one more for you, and then we'll go back to Stephen and talk Senate. But I'm wondering, in the House, how would you characterize Republican support for Donald Trump in the House of Representatives? Is it across the board? Are there still some folks in the House of Representatives who are more of the quote-unquote traditional Republicans, the sort of cut from the same cloth as Mitt Romney, who aren't necessarily the Matt Gaetzes of the world.
Well, I don't know if they're all Matt Gaetzes, but they're overwhelmingly in support of Trump. There are a few that you want to watch. Don Bacon in Nebraska just had his race called. It was very close. He initially supported or said he would prefer Tim Scott or Nikki Haley as president. So he came around when there was nobody left to back Trump. But he's always been a moderate, and there are a handful of lawmakers like him. How open they will be, though, in this environment to breaking from the president is very doubtful.
Stephen, I'm going to take Tim's question and give that to you. What about within the Senate here? Is there opposition of Trump, even though there's a Republican majority, or are they more aligned with Trump and his policies?
Yeah, Emily, I think right now we have what's, sort of the traditional honeymoon period where everybody is sort of tweeting out their congratulations and they look forward to working with President Trump on his agenda. But keep in mind that 3 Republican senators who will be here next year voted to convict him of his impeachment and his second impeachment trial over January 6th. A 4th, Mitch McConnell, blamed him. A 5th, John Thune, was sharply critical. Many others were very critical of either his behavior then or some of his policies. A bunch of Senate Republicans that I've talked to in recent months are not supportive of his plan for global tariffs. And you've got this big tax bill. That's the trillion-dollar question here for a lot of our viewers, a lot of our readers, is about $5 trillion over 10 years in Trump's tax cuts expire at the end of next year. He needs to get a bill through Congress, through the House, through the Senate, both of which will be narrow. And if a handful of people defect, they're going to have to rewrite that tax bill. So that could be some people want more deficit reduction, other people want more tax cuts on different agenda items. That's going to be a big tug and war all year long, and these margins really do matter. The fact that it's 53-47 means, you could see 4 moderates stick together and make some demands. And we certainly saw in 2017, when the margin was 52-48, that had a determinative effect, and they couldn't pass their repeal and replace of the Affordable Care Act because John McCain did the thumbs down after midnight, right? So, things like that, 53-47 becomes slightly more feasible to do something on health care or other things besides taxes. That's what we're going to be paying a lot of attention to, chasing senators and asking them what they want in that bill.
Really appreciate both of you guys taking the time and joining us this afternoon. Stephen Dennis, congressional reporter, also who covers the Senate. Also Billy House, who covers the House of Representatives, also congressional reporter for Bloomberg News, joining us from D.C.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index hovering right around 6,000. A post-election rally in the S&P 500, though, losing steam. Technology shares getting hit today, but most U.S. stocks are gaining. Bitcoin, what a story there. Right now we got Bitcoin at 86,530. The S&P little changed up 4 at 59.99, a gain of just about 0.1%. The Dow up 330, up by about 0.8%, while NASDAQ is lower by 17, down 0.1%. The Russell 2000 index of small cap shares holding on to a gain right now of about 1.5%. Spot gold down $65 the ounce, down 2.4%, $26.19 on spot. West Texas Intermediate crude down 3.3%, $68.05. Now Bitcoin at 86,416, up 8.1%, rallying past 86,000 for the first time, boosted by President-elect Donald Trump's embrace of digital assets. Meanwhile, MicroStrategy said it purchased about 27,000 Bitcoin for around $2.03 billion in one of the largest acquisitions of the digital asset by the crypto hedge fund proxy. MicroStrategy surging now by 23.5%. Recapping, S&P higher by 3 points, little changed, up just under 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thanks for that update. Do appreciate it. Well, it is today's big take. It's also one of the most read stories on the Bloomberg terminal. It's about the small band of quants who are shining a light into the shadowy world of unlisted assets. Yes, we are talking about private markets. Times have been tough, high borrowing costs, hurt returns, managers are struggling to exit those investments, and then you got regulators circling. All that is bringing back an issue that has long haunted these opaque holdings. No one is quite sure how to actually measure their performance. Justina Lee is Bloomberg News Markets and Quants reporter. She joins us from our London bureau. Check out her story and more from Bloomberg The Big Take on the Bloomberg terminal and at bloomberg.com/Big Take. Justina, you profile some folks who are trying to demystify and shed some light on these returns in this opaque corner of finance. We're going to get to those individuals in just a minute, but why do they argue that this is something that needs to be uncovered? I mean, we're interested in it, of course, but why do they argue it needs to be uncovered?
I think part of the reason is that they're just here to try to answer, the most basic questions in investment management. Like, when you're paying fees for these managers, are they really doing better than the S&P 500? Or, how volatile are these investments really? And so they're really like very fundamental questions to this massive and growing asset class. But at the same time, I mean, it's always been really hard to answer these questions because when you have kind of a manager reporting, asset values, once a quarter or even less than that, and those values not being from a traded market, I mean, it gets really hard to even just answer those questions.
So, Justina, walk us through some of the people that you interviewed for this story, these quants who are at least trying to shine a light onto private market returns, and what is what they're doing, so worthy of writing a big take on?
Yeah, so the main quant I speak to is Barry Griffiths, who's kind of semi-retired right now, but his last job was as the head quant at, the private market giant Ares Management. And before that, he was at Landmark Partners, which was acquired by Ares. And what I think is really interesting is that he's kind of a classic quant, but he didn't go into public markets where kind of a lot of people with these kind of backgrounds get into. And so his whole career in finance, he was at Goldman Sachs for a while, and then he was at Landmark, has been trying to kind of use math to find an edge in private markets. And what he told me is that he feels like, I mean, the math is a lot harder, but if you can crack it, you actually have more of an edge, because in private markets, there are just not that many quants, whereas we all know that the quants kind of run Wall Street at this point when it comes to, the stock market.
So how's he doing this? There's not much information that's available, even for investors who are investing in these companies or buying these products. How does he think he can actually measure these returns?
Yeah, so for instance, he's a big proponent of this method called direct alpha. And the math is actually not that difficult. But what it tries to address is in private markets, you have this issue where the manager gets to call capital and distribute it at different times. And so he tries to match the cash flows of your investment with the opportunity cost of what it would have earned in the public market, and to try to then kind of distill what exactly is the alpha you got from that private manager that you wouldn't have gotten kind of from public markets, which are kind of obviously low fee and very accessible. And so, I mean, I think you can kind of see how if that kind of analysis spreads, and it's important to note here, there's still a lot of, contention over how good these methods are. But if this spreads, I mean, you can kind of imagine, what's happened in the hedge fund world where, I mean, no one really gets to charge fees these days unless you can kind of prove that you deliver consistent alpha.
Yeah, talk a little bit more, Justina, about just how much this would change private markets, because I know when we think about private markets, it's almost as if the returns are intentionally opaque.
Yeah, I mean, I think that's a really good point. It's the idea that, you have to be a participant in this to actually understand.
Yeah.
Yeah, so like, for instance, what kind of a lot of the practitioners say is that once you start using these methods, sometimes you see a manager who had great absolute returns, and sometimes maybe even it looks pretty good, kind of relative to the S&P. But once you drill down, then maybe you'll find out actually it's because they took a lot of risk, behind that. Or kind of once you actually match the cash flows, they didn't actually beat the S&P 500. And so I think that if this kind of spreads, you can kind of see how it raises the bar for a lot of managers the same way it's really raised the bar for stock pickers in the public markets.
So do the folks who are participating in private markets, not the investors, but the actual folks who are selling these products and doing the investing, are they for more or less transparency in general? Like, how would you characterize their view?
Well, I think what a lot of them will say is that, there's nothing wrong with the status quo. I mean, partly that's because, private markets have had a really, really strong decade. I mean, at least on the surface of it, they've beaten kind of the S&P 500. And there are more companies staying private for longer. And so they always tell you that a lot of allocators are perfectly happy. And the other issue is that, because there's so much less data, I think it takes these quants a lot more effort to convince investors that these methods actually work. And there's still a lot of debate over how good they are. And so I think in that sense, I think a lot of people in the PE industry, I mean, they're not really thinking about these things just yet. But I think as I wrote in my story, I think we're beginning to see some signs that a lot of allocators are more interested in these questions these days, especially with kind of interest rates coming up and kind of pressures piling on the industry in general.
Do we have any sense of just how many investors or like how many assets in total are using methods or working with people like Barry Griffiths right now?
Yeah, we don't have kind of any data to kind of really get into that just yet. But, a few examples in my story, the Japanese kind of GPIF, the massive pension fund. So they're using sort of their version of direct alpha. And what they said was that, we need kind of private markets managers to beat public returns. Like, that's the whole point. And, we kind of saw earlier this year that Norway's massive sovereign wealth fund, I mean, they also use direct alpha to analyze whether they should get into private equity. And so, and kind of I talked about Arctos Partners, which is this other manager that says it's really changed kind of the way that they approach kind of evaluating PE managers. And so I think there are some signs here and there. And, with kind of BlackRock buying Preqin this year, I think that was also a sign. They talked a lot about kind of bringing the data analytics of public markets to private markets.
Hey, Justina, thanks so much for joining us on this. Really do appreciate it. Check out her story. It is today's Big Take. Justina Lee, Bloomberg News Markets and Quants reporter. Check out her story at The Big Take on the Bloomberg Terminal. And of course, also at Bloomberg.com/Big Take. Taking a look at equity markets, just about a little over an hour until they close. Bond market, as a reminder, is closed for Veterans Day here in the U.S. The Dow up more than 0.7%. The S&P 500, it's in the green, but fractionally. The NASDAQ down about 0.1%. The big story, though, happening in crypto right now. Bitcoin higher by 8.2%, $86,000 per Bitcoin. Coming up next, Silicon Valley Where do the Harris supporters go post-Trump victory? That's next.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. What would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. To do that, just visit youtube.com/Bloomberg Podcast. Click the link in our profile section or the community section to take the survey. It's hosted by our partners over at Material. You can fill it out now at youtube.com/Bloomberg Podcast. Still trying to keep an eye on everything that's happening in crypto today, given the optimism that we're seeing. Bitcoin up, Emily, by another 8% today, $86,256 per Bitcoin.
The story that Bitcoin hit a record high has been on the top of top.
It's like a story every day since last week.
Yeah, but this is almost new territory. For our terminal users, they know. If you go to top, there's always 4 stories that are given
What's the
most.
secret?
I don't know. I wish
You're
I
on
knew
the Bloomberg
secret.
News side, so you have all the secrets.
No, I don't know those secrets, but I do know that this is drawing a lot of eyeballs today.
It's not just Bitcoin that's higher. Ethereum higher by 4%. We're seeing Solana up by 3%. Dogecoin
is also moving as well.
Yeah, 17% to the upside right now. Hey, speaking of election implications, there were certainly some prominent tech folks who were pulling for Donald Trump. Elon Musk, David Sachs, Palmer Luckey, to name a few. Their bet looking like it'll pay off. On the other side are the ones who supported Kamala Harris. A venture capitalist and LinkedIn co-founder Reid Hoffman made his anti-Trump case to Carol and me at the Bloomberg Tech Summit back in May before Biden dropped out. Well, where do they go from here? That's the big question. That's one that Ed Ludlow tried to answer in today's Tech Daily newsletter. Sign up for it at Bloomberg.com/technology. Ed is the co-host of Bloomberg Technology on Bloomberg TV. He joins us from San Francisco. Ed, where do these venture capitalists go from here, these Harris supporters?
Yeah, I mean, there's a lot of soul searching, and inevitably, like, there's a big section of Silicon Valley that is very disappointed with the outcome. But a lot of people that I speak to are basically like pretty pragmatic about it as well, right? Which is that President-elect Trump is President-elect Trump. And I think what was so interesting in the course of the week, you know, I'm talking about loads and loads of phone calls, loads of conversations, that if you actually think about what many people called for ahead of the election in terms of what they felt was best for the technology industry, their wish list under Kamala Harris is very similar to what they're likely to get with Trump. And it surprised me how many people are being kind of open about that.
So are you seeing people, I guess, they're less anxious about a President Trump? Tell us more about those kind of conversations and what exactly maybe converted people who did vote for Kamala but are now feeling more positive.
So what we're talking about is venture capitalists, right? They're investors that write checks into smaller technology companies in the hopes that over a number of years they'll grow into something big, a success, yeah? And a lot of the barriers to that they have in common with much of the VC and tech community that supported Trump. In other words, they think there is too great a burden from regulation. President-elect Trump's largely pledged to deregulate, cut red tape. And so they with sort of time to sleep on it, kind of feel like, okay, well, that could be good because we share that sentiment. I'm sure that Tim and I have discussed this in recent weeks, but the probably biggest area of common ground is on the regulators themselves, right? I think that Gary Gensler is the chair of the SEC and Lena Khan, the chair of the FTC. Democrats and Republicans in Silicon Valley and tech more broadly had consensus really that they didn't want either to remain in post.
Ed, I think one fascinating thing about this whole, you know, this election surprise, I think for a lot of people, not surprise for others, is how this plays out in the terms of interest rates. Because we're seeing it play out in the equity market right now, but the bond market, which is closed today, has been telling this different sort of story last week. If rates don't come down, that's not so good for venture capitalists.
Yeah, I mean, if you speak to any venture capitalist, they'll usually tell you that they are long-term investors with a 10-year horizon who don't worry too much about the current either economic environment or where rates are currently at. But there are a number of factors you have to take into account. One, basically access to capital and liquidity in all financial markets has a trickle-down effect to even the smallest startups that are trying to consider their own cash flow and fundraising. A lot of VCs, particularly at later stages, will use equity markets to benchmark the companies they're backing versus publicly traded peers. And so valuations are a criteria of that. It's super interesting. But mostly it's just that, you know, there are lots of startups that are not sort of, what's the polite way of putting this? Are not sort of hard to understand software companies. They're doing something tangible where the technology that they're working on is in the real economy, so to speak. And that's where the operating environment and as it relates to rates is probably most felt. But in terms of like, like just real quick, Tim, I guess one thing that we will be interested to see what happens is in a very low rate environment, LPs, investors that hand over money to VCs like to do so because they can get a much higher return.
Ed, we're going to have to leave it there. Everybody go check out Ed's Tech Daily newsletter. You can sign up for it at Bloomberg.com/technology. Ed, the co-host of Bloomberg Tech on Bloomberg TV. Check it out. Wall Street time, 11 a.m. each and every day. Coming up next on TV, it's The Close. Emily and I continue on radio.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. Donald Trump's team is coming together as Christian Benavides reports.
Trump announced former ICE Director Tom Homan will be his border czar.
Public safety threats and national security threats will be the priority.
Trump has tapped New York Congresswoman Elise Stefanik to serve as ambassador to the United Nations. Stefanik made national headlines last year, questioning university presidents during hearings on anti-Semitism on college campuses. CBS News has learned Republican Senator Bill Hagerty of Tennessee, a staunch opponent of Ukraine aid, is being considered for Secretary of State.
President Biden led the Veterans Day observance at Arlington National Cemetery. He spoke of his desire to end U.S. involvement in wars.
4 presidents faced a decision after we'd gotten bin Laden whether to end our longest war in history in Afghanistan. I was determined not to leave it to the 5th.
CBS's Nancy Cordes.
President Biden, who has been part of the public atmosphere here in Washington, D.C. for nearly half a century, this is probably one of the last times that we're going to see him in a setting like this in his public capacity, first as a senator, then as vice president, now as president.
In Southern California, they're continuing to fight the mountain fire. Across the country, the Northeast is seeing unusual fires. Tom Howley is mayor of Greenwood Lake, New York.
In my over 50 years of living here, this has been the most significant and probably most potentially dangerous situation I've seen or been involved in.
200 nations have gathered in Azerbaijan to address climate change, and the U.S. envoy had an unusual warning. Stacey Lynn reports.
For those of us dedicated to climate action, last week's outcome in the United States is obviously bitterly disappointing.
He says he's worried President-elect Donald Trump will put climate work on the back burner.
It is clear that the next administration will try to take a U-turn and reverse much of this progress.
Trump has pledged to withdraw Washington from the landmark Paris Agreement.
That is what he has said, and we should believe him.
Stacey Lynn, CBS News, Washington.
Israel may be moving to allow more aid into Gaza, as Elizabeth Palmer reports.
Israel faces a U.S. deadline this week to increase aid or face restrictions on American military support. And it appears to be working. We went to see aid trucks ready to roll at one of 4 access points.
The deadline is Wednesday. On Wall Street, the Dow is up 313 points. This is CBS News.
Message and data rates may apply.
There have been all kinds of events in the skies over the past several months, including northern lights and a bright moon this week, as Michael Toscano reports.
A supermoon is the regular old moon that just happens to be a bit closer to Earth, so it looks larger and brighter than usual.
So you get a lot of moon viewing.
Astrophysicist Dr. Jackie Faraday of the American Museum of Natural History.
Go outside. Turn around and look the other way.
Access the financial world on demand.
Hear from leading economists, policymakers, and industry experts via live and on-demand webinars.
Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Happy Monday, everybody, and very happy Veterans Day to everybody, thinking about all those who served. Bond market closed as a result of the Veterans Day holiday. The equity market, though, is open. And you know what? Emily Grafeo is here for Carol Masser. Emily, how are you?
I'm doing well. I was about to say all the people that would have been investing in bonds today just decided, let's go in another safe haven asset and just buy a bunch of Bitcoin.
Okay.
That was
she called it a safe haven.
That was a joke.
Yeah. Well, I have nothing to say. I love it. Hey, we got a great program coming up in just a couple of minutes. We're going to be speaking with Peter Atwater. He's president over at Financial Insights. He's an adjunct out at William & Mary. We love talking to him just to kind of get a sense of everything that's happening at a current moment. He's kind of a go-to for us. He's got some great recent newsletters out, one specifically on the bro trade that's brewing under the Trump administration.
And we also have Ty Brady, chief technologist for robotics at Amazon, on the future of work with AI.
The question I always have about these robots is, can they be programmed to love?
Can they be trusted?
Okay, that's probably a better question. Hey, also, trying to make sense of what's going on with Trump's tariffs. Erica York is senior economist at the Tax Foundation. She's going to be joining us a little later to give us an idea of what Trump's tariffs would mean for taxpayers and for us who are out there buying goods each and every day. All that and more coming up over the next 2 hours right here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here's Charlie Bella.
Hi, thank you very much. And here's what's going on. We have got stocks trading mix, little change right now after an earlier run-up on the S&P. Right now, higher by 4, below 6,059.99 where we stand, up by less than 0.1%. Dow Industrials up 314. That is a gain of 0.7%, while NASDAQ is lower by 11 for the NASDAQ Composite Index, down now by about 0.1%. The Russell 2000 Index of small cap shares ripping higher, up by about 1.4%. Gold now lower by $63 the ounce, 26.21, decline there of 2.3%. West Texas Intermediate crude oil down 3.2%, 68.14 for a barrel of WTI. Bitcoin has topped $86,000. Last hour it was flirting with 87,000, up 8.4% right now. Bitcoin 86,660. So again, stocks trading mixed with the S&P up 3 right now, up by about 0.1%. But what about the market backdrop? Cameron Dawson is Chief Investment Officer at New Edge Wealth.
I think that we have to appreciate in the short term that the trend is still resoundingly positive. And that has been the theme all year long, which is that every time that this market has been challenged, it pulls just slightly back to trend and keeps roaring higher. I don't think that we can ignore completely how stretched valuations are getting.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Southwest Airlines going to be offering departure packages or extended leaves to airport workers in 18 cities. And at its headquarters, Southwest shares are up now by roughly 3%. And briefly, AbbVie shares lower after 2 mid-stage trials of its drug to treat schizophrenia failed to meet their primary goal. AbbVie shares, they are trading lower right now. We got AbbVie down by 12.4%. S&P up 4, up 0.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thanks for that. Do appreciate it. We've been looking forward to our next guest for quite a bit of time. It's because Peter Atwater is a go-to for us. He helps us understand how we got to a certain place and also where we're going. He's adjunct professor of economics at William & Mary. He's also the author of The Confidence Map, Charting a Path from Chaos to Clarity. That book came out last year. He's also president of Financial Insights. It says it uses a confidence-driven framework to give perspective on the financial markets and the economy. Peter, always good to have you join us. I want to use that framework, the one about confidence, to understand what happened in the U.S. last week with the resounding election of Donald Trump. How should we look at confidence as a factor there?
Sure. So going into the election, I felt that voters were going to select the candidate that addressed the vulnerability that mattered most to them. And that's a very individualized thing when confidence is low. Moreover, it favors the candidate who's not the incumbent. And so I think as a backdrop to what we've seen is this was as much a rejection of the incumbency as it was a mandate for Donald Trump.
But you also write that, I mean, typically we usually see, I guess, that pattern that the incumbent, if people are feeling confident in, what the incumbent has done, they vote for the incumbent, and if they don't, they vote in another way. But just looking at your note that you sent over, it does seem like there were some specific voters, specific types of people who were voting for Trump that had some very, I guess, particular issues in mind that they brought to the polls that maybe other people were maybe blind to.
Yeah, I mean, you have issues of immigration, you have issues of inflation. On the other hand, you have folks who feel threatened by a lot of the liberal agenda. And so what we have behind this election is an interesting composite whose interests are aligned in getting the incumbent out. And it remains to be seen, in my opinion, whether the cohesion that exists in opposing a single candidate will be able to be sustained. It feels more like a loose cooperative than it does necessarily a unified body.
Well, we do see some unification within the Republican Party right now, at least when it comes to composition in Congress. We spoke to Billy House and Stephen Dennis earlier, and they talked about, yes, there is some resistance to Trump within the Republican Party, but few and far between, at least in the House of Representatives, a little bit in the Senate, where you have some senators who actually did vote to impeach the president-elect back when he was president. That said, it does look like Republicans will maintain control of the House of Representatives. How would you advise them over the next 2 years to latch on to the lack of confidence that Americans expressed at the polls in Democrats, to use that to their advantage, to actually go through with their policies?
Yeah, I think that we spend a lot of time focused on the left-right divide. To me, the greatest issue in the United States today is the wealth gap between those at the bottom and those at the top. And so whether I was advising, a second Biden administration or the new Trump administration, this is really a time where attention needs to be paid to those at the bottom in creating a means by which moving up the capital ladder is possible.
So,
sorry, go ahead.
No, sorry, Tim. So when you think about who could be the biggest then beneficiaries of a President Trump, who comes to mind?
Well, it depends on your time perspective. I mean, today what we're seeing is the market concluding that the biggest beneficiaries will be really part of this broad Elon Musk bro trade, as I call it, where it picks up crypto, it picks up space, Tesla. There's a lot that is involved in this broad entourage trade. What concerns me is that between now and inauguration date, everybody can fantasize about what is likely ahead. The rubber doesn't meet the road until after inauguration day. And so investors need to be careful not to front run to an enormous extreme what they foresee ahead. And from my perspective, that's exactly what's happening right now. Between regulation, taxation, the endorsement of this Elon Musk-Trump partnership, their investors are counting on a very clear, unencumbered future ahead.
How much did you see that in play when it comes to prediction markets? Because it was astounding seeing how the night of the election, the prediction markets, I'm thinking of Polymarket, was basically pricing for Trump to win hours before we saw, even... I
mean, they were weeks before Polymarket.
Weeks before, yes. But especially on election night, too. There was a really big gap between the broader consensus and what prediction markets were saying. I'd love for you, Peter, to kind of opine on how that comes into play and whether you are seeing, I guess, people who use Polymarket are maybe going to be people who are already more pro-Trump.
Yeah, I mean, you have a Venn diagram today of crypto, gambling, sports. There's a large overlap of participants and more importantly, confidence. And so to see that influencing the Polymarket environment doesn't surprise me. What I've been watching actually, to me, was a better leading indicator was the developing coil in Tesla. That if you had gone back and looked over the last 3 years, you've seen this narrowing coil. And these are emotional tugs of war between the bulls and the bear that ultimately, when the rope gets released, the energy that is released with that moves things to one side. And so ahead of the election, you could see that when Tesla's earnings surprised and the stock popped, that the rope was already beginning to let go.
So what could actually lead to some sort of pullback right now? We're seeing really kind of exuberance everywhere, Peter.
Yeah, so this sort of exuberance dies on exhaustion, that everybody who believes in it has committed the maximum amount that they're going to commit. It's also an environment that likes round numbers, so it wouldn't surprise me to see if we get, an ascent to Bitcoin 100,000. I mean, that feels like a logical next step. Again, remember that this is an environment where it is incredibly transparent on X, what people are positioned in, where they're going. And you have to believe that institutions and others are now betting on the crowd's bets. And thanks to all of these, fast fashion ETFs, the ability to add extreme leverage into all of that is part of the appeal. This is a fast-moving gambler's game that is going to draw everybody in before it exhausts.
It's just remarkable, too, to see it play out in real time on the X platform, which, by the way, looks completely different to me now, a couple years later, Peter, than it did before Elon Musk bought it. But that's a conversation for a different day. Peter Atwater, adjunct professor of economics at William & Mary, author of The Confidence Map, Charting a Path from Chaos to Clarity, also president of Financial Insights, joining us this afternoon from Pennsylvania. This is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. President-elect Donald Trump has named former New York Representative Lee Zeldin to serve as administrator of the Environmental Protection Agency. That, according to the New York Post, citing a statement from Zeldin. So again, repeating the headline, President-elect Donald Trump naming former New York Congressman Lee Zeldin to serve as administrator of the EPA, again, according to the New York Post. The Dow, the S&P, NASDAQ trading mixed right now. We have got a post-election rally in the S&P 500 losing steam today. A little change right now below 6,059.99. That is a gain of just under 0.1%, up 3 points. The Dow rally fading somewhat, still up 290 points, but off session highs up 0.7%. And NASDAQ unchanged, little changed on the day, down 4 points right now, while the Russell 2000 index is up by 1.5%. Spot gold down $62 the ounce, down 2.3%. West Texas Intermediate crude down 3.1%, $68.18 a barrel. Well, certainly a lot of economic data this week, and among the most closely watched reports will be consumer prices on Wednesday. But Neela Richardson, chief economist at ADP, says she will also be focusing on the week's jobless claims number that comes out on Thursday.
We saw a really negative private sector print from the BLS for October. So we should see some indication in this high-frequency data that companies are laying off. We haven't yet. It's still super low, and that's an indication that the BLS number may be revised higher, or that the labor market looks a bit stronger than that last report would suggest.
And you can hear more of the conversation with Neela Richardson on the Surveillance podcast. Download it wherever you get your podcasts. Oil extending declines as a soft outlook for demand in China continues to plague the market. Oil stocks moving lower as well. Case in point, ExxonMobil down now by 0.7%. ADRs of BP down 0.2%, while Chevron lower by 0.4%. Recapping, S&P up 4, a gain of just about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Emily, I don't know if you saw this earlier, but Amazon is reportedly developing smart eyeglasses to guide its delivery drivers around and within buildings. This according to Reuters, who cited 5 people familiar with the matter. If these work, glasses would navigate drivers on a small embedded screen along routes and at each stop. The idea is that it aims to reduce delivery time. What do you think?
So, because you see it in your vision field instead of having to look onto the dashboard of the truck or onto your phone?
Or when you're walking around holding a package, you're like, okay, this is exactly the house it needs to be delivered to. Yeah, kind of a cool little... I should note, an Amazon spokesperson told Reuters it is continuously innovating to create an even safer and better delivery experience for its drivers, but it would not comment on its product roadmap.
I want to see like a prototype of what they would look like.
I think this is a real use case for smart, for like the Google Glass type thing. They've been used for quite a while. They never caught on with consumers. They're trying to make that happen at Snap and at Meta still. We'll see if it happens, but the industrial use case is certainly interesting. We got with us Ty Brady. He's chief technologist for robotics at Amazon. Ty, I'm not going to put you on the spot and ask you to comment about this report, because we already got a comment from an Amazon spokesperson. But it does talk a little bit about innovation happening at Amazon. I know you guys did this interesting survey with MIT on what AI could mean for workers. Before we get to that, just give our viewers, our listeners, an idea of the role that robotics play right now at Amazon.
Well, first of all, it's a pleasure to be here, and thank you for having me on. I really appreciate it. Boy, I'll tell you, the age of physical AI is here, and it is really proving useful for our customers. We have our robotic systems inside of our fulfillment centers. We've actually just rolled out our next generation fulfillment center down in Louisiana, and we're seeing a lot of returns and gains on that.
Is this the Kiva system that Amazon bought over a decade ago?
It is based on that. That is part of it. What we do is that we have robotics that can move goods. That's part of the Kiva systems, but also robotics that can store goods and sort goods and identify all the various goods. And we have this in this next generation fulfillment center where we have 10 times the amount of robotics that we've ever had under one roof. And we're already seeing that we can process those orders 25% faster and also pass them on to a lower cost to our customers.
Just so we understand, when we order something on Amazon using the app or using the browser, does a robot now pick that item at a fulfillment center, or is it still a human being?
Yeah, it's an amazing series of events that actually happens when you go on Amazon.com. You're getting your holiday order ready. We of course want to have the world's largest selection of goods for our customers. We want to process that at a low cost and then have the ultimate customer convenience. And robotics is helping all along that way, right? So people and machines working together. We have AI systems that source put the right products in the right area so that can be closer to our customers. That helps on our delivery times. We have robots that move safely around people, that we inbound those goods into our buildings, where we can take on more goods, put more goods in the same footprint as we've had as compared to our manual buildings. We can store actually 40% more goods. And then we have robotic systems that help sort and even package those items for our customers. All this is so that we can just have the ultimate in customer convenience and get the right good right to the customer's door.
Ty, what is a 2024 robotics system? And how is that different than the systems that we saw 10, 15 years ago? I'm just thinking about how I used to watch that show, How It's Made, and it would show factories, and there were always robots working in the factories and moving things along a conveyor belt. So what is so different about, the 2024 robotics?
That's such a great question. We have really seen just huge advancements over the last few years when it comes to robotics, and it's why we call it physical AI. It's really the embodiment of adaptive behavior in our robotic systems. But our robotic systems shouldn't be viewed as singular and as alone as just machines. Instead, what we do is we build our machines to extend human capability. We build our machines to augment folks to do their jobs better and create a safer environment for them. We've seen those benefits in the last 4 years with regards to safety and also in regards to the efficiencies and the productivities. But the big, I could talk about more and more of the robotics that we've seen, but we also have to, I think the big mindset is when you reframe your relationship with machines.
Yeah.
People first attitude towards of how we build those machines, that allows people to do more. And now we are upskilling. We put $1.2 billion into an upskilling pledge for our employees. And then we as Tim said, we funded this independent study with MIT in order to understand the perception of technology and how people adopt machines and AI into their work environment.
So let's talk a little bit about that, because I think you hit on a really important point here, and it's the idea that, and I was kind of joking about this a little while ago. I was like, can these robots be programmed to love? But the fact is you do have to be comfortable being around automated things that could look like humanoids. They might not look like humanoid robots. What did you find through this collaboration with MIT about how people want to interact or need to learn how to interact with machines?
It was a fascinating study. It was actually groundbreaking. MIT enlisted Ipsos to survey more than 9,000 people across 9 different countries to understand how they perceive technology, because perception is really important to adoption and even to innovation, right? As I said, we put people at the center of the robotics universe. We really want to understand how people, and if they will, adopt technologies. And broadly, we found, or the study found, that a majority of people see robotics having a positive impact on their pay and on their career. And there's three key findings that came along with that. First of all, if people are asked to work at a higher level and can focus on higher order tasking, then they're more keen to adopt technology, and they're more optimistic when it comes to the use of the technology for their own career goals and their own pay. The second is if they felt valued by their employer. Right, so being valued is both, are you working in a safe environment, and do you have a great benefits and pay? And at Amazon, we're really proud of the benefits and pay that we offer our employees, and also through automation, we're actually reducing the number of recordable injuries significantly over the past 4 years. And then the last part is really those that want to learn more and take control of their career. So if they want to learn and grow in their career, they were more optimistic for technologies. And that was really good news for us as we put in $1.2 billion into upskilling our employees. So they're good signals, but we're not done yet because this is across many, many workers across many industries. And we're going to follow on this study with actually a survey of our Amazon employees directly, because we're always interested in the voice of our customer, the voice of our employees, and we always want to make this a safer, more productive environment.
What's a takeaway that you had from the survey about how you're going to either design or implement robotics across Amazon? Like, what's one actionable thing you took away from this?
Well, the first action that we had is that we actually want to fund more studies. We want to fund the study particularly for Amazon employees so we can hear directly from them of their perception and how robotics is really augmenting and extending the capabilities. So we are, the voice of the customer is our first actual takeaway that we had from the study. The second is really validation of our philosophy of putting people at the center of the robotics universe, right? It's this validation of augmentation and extension and allowing people to do what they do well. Thinking with common sense and reasoning and really understanding the problem at hand. People do this amazingly well. So our job as roboticists is to complement that amazing skill that our employees have, that people have, with machines that can be better designed. So very concretely, for example, we have a robot called Proteus that is free roaming inside of our fulfillment centers that moves goods on demand. And it understands where people want to be, and people can look at the robot and understand what the intent of that robot is. So its job is to move these vessels of goods to our dock doors safely, and it's fully around people. Right. So the concrete actionable thing is that we are getting this really strong validation that by extending and augmenting human capability, not only can we be more productive, but we can also create a safer environment.
We don't have a ton of time left, but I'm curious, when you talk to Amazon employees, what are some of the biggest concerns that they have when it comes to robotics in action?
Yeah, well, we always think about the voice of the customer first and foremost. It is one thing in order to do like a robotic system in your lab and convince yourself that it's going to work in the lab. But when we roll out what we call our alpha and beta deployments with our customers, we get firsthand their quotes of what is working and what is not working. We should build our machines so that you can reasonably and tangibly use the machine in very intuitive ways, right? You shouldn't have to have 18 degrees in order to figure out how to use the machines. And we get that feedback quite often to say it needs to be simpler, it needs to be less complex, and it needs to have the utility in order to extend and complement human creativity.
We're gonna have to leave it there, Ty. Do appreciate you joining us, Ty Brady, Chief Technologist for Robotics over at Amazon, joining us this afternoon from Boston. Emily, this is a real thing, is to try to like understand how humans are going to interact with these things, because that changes how we work.
I would be a little afraid of a robot, but if it was doing tasks that I didn't feel like doing, then I would be friends with it. Then I would really like it.
Do the dishes.
Like, I'd be very nice to it. Yeah.
I get that. This is Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We got Bitcoin just taking out 87,000 right now. The Dow, the S&P, and now NASDAQ all back in the green. Lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. The Dow is outperforming today, trading higher by 300 points. The S&Ps are a little change, while NASDAQ is higher by 12. Bonds were closed today for Veterans Day. Gold is down 62 points. Oil is also sinking, but you mentioned Bitcoin. Bitcoin is surging by 9% and tops 87,000. Among the main 11 S&P sectors, leaders for financials and consumer discretionary, tech and real estate were under pressure, and leaders to the upside in the Dow, Salesforce and Honeywell, while Boeing, Merck, and Apple led to the downside. In the pharma space, Bristol Myers rose 11%. That's the most since 2006 after a failure of an AbbVie drug. And in deal news, Cigna confirms it won't pursue a combination with Humana. Wrapping things up, Live Nation reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, look at that. Less than 20 minutes to go until the closing bell. Once again, the equity market is open. Bond market, not so much on this 2024 Veterans Day. Here in New York, Emily Grafeo and I, right now, we're joined by Greg Halter. He's Director of Research at the Carnegie Investment Council. For our drive to the close, Carnegie has about $4 billion in assets under management. Greg, good to have you back with us. How are you?
I'm doing fine, and thanks for having me back again.
Yeah, we love it when you join us. Hey, we haven't actually talked to you in quite a bit of time, but the real thing I wanted to ask you about first was the election. And if Trump being elected to a second term changes at all your thesis. Look what we've seen with equity markets. Look what we've seen with crypto just in the last 4 days. It's pretty remarkable.
It's definitely remarkable, although if you look back at history, in cases where you have a unified government, one party or the other, the equity markets tend to do well leading up into the inauguration. And we're also in a very good seasonal part of the year, November being, I think, the best month. So we've got a few good things going for us. Maybe the election there is just, I don't want to say just an election, but it kind of fits the pattern of what we've seen historically. Again, like the numbers, there's not that many observations, but the ones that there are generally show positive.
What about when it comes to what you're seeing in the bond markets? I know Tim said the bonds are closed.
Except for today.
Today, but, you know, there has been a rise in rates since Trump won the presidency. It reversed a little bit, but overall, I've been hearing a lot of people say that Trump's policies are going to reignite inflation and yields are going to go up. What do you make of that?
Well, I think you go back to the couple days before the 50 basis point cut, and that's actually was the low. And we've seen, at least on the 10-year, probably 70 basis points of increase since then, dropped maybe 20 basis points here recently. So I don't think this is due to the election, this most recent move. And I think it has to do less with inflation and more with the growth expectations, and maybe the market sniffed this out.
Greg, what do you make of what's going on in crypto? This is not in your notes, so you don't write about crypto at all in your notes, but we can't ignore it today. We heard the numbers from Charlie a little earlier, but they're worth repeating. Bitcoin up another 9% today, 87,000 for the first time ever. Market cap of $1.7 trillion. Are traditional investment managers ignoring Bitcoin at their peril?
Well, they certainly have, if you look at the past 10 years with great volatility. But I think what you're seeing now is the potential for less regulation from the new administration, maybe some sort of stockpile of Bitcoin by the U.S. potentially. maybe some central banks buying there as well. And 1 whatever trillion you mentioned is really peanuts relative to the assets of equities and bonds and other areas, other investment classes, if you will, out there. So it is small. There's huge potential here. I've heard some talk about 90,000 as being the next point. We're almost there as of today. So it's definitely been on fire, if you will, broke through the level of the 70,000 or so, and it's been off to the races.
We might get there by the time we're done talking, given what's happened today. Hey, you hit on something really interesting, and I've been thinking a lot about it because a general theme that has emerged is less regulation, less regulation, less regulation. And that's something that Kathy Wood spoke to me about last week. But at the same time, I wonder if there's this balance that may need to exist when it comes to regulation. And yes, investors certainly cheer when regulation kind of loosens, but I think we have to remember that regulations are there for a reason. There's a reason that we're required to wear seatbelts, for example, in cars. And I'm wondering if we get to a point where it's a risk that a lot of regulations get rolled back.
Great question. And I think there's good regulation and there's over-regulation. I believe Jamie Dimon mentioned this not too long ago, and hence you've seen the stock price there do very well last week. At what point is the over-regulation? That obviously is a point of contention. I think a lot of times you get fiefdoms, governmental fiefdoms or whatever, and there's too many hands in the kitchen, if you will. You know, look at bank regulation. You've got OCC and FDIC and the Fed and then the states, and there used to be a Federal Reserve Bank examiner. And do we need all these entities when they're all protecting the safety and soundness of the banks? Meanwhile, private equity and private loans have really taken over a lot of the work that the banks used to do. So you can see why Jamie Dimon made those comments. So again, there's good regulation like seatbelts, and there's over-regulation. And where is that? Obviously, that's in the eye of the beholder and the people that run the companies as well. So it's a tough one. And obviously, there'll be winners and there'll be losers here. That remains to be seen for sure.
Greg, talk a little bit about the energy sector and what your outlook is for energy, particularly under Trump, because you made a lot of notes in your notes to us on that, and I want to hear your thoughts.
Sure. I mean, if you're talking drill, baby, drill, drill, that's good in terms of production. We're at 13.5 million barrels a day, I believe. How much higher can we go? And if we do go higher for both the oil and natural gas, you know, how are you going to handle all this? And actually, that could mean lower prices for the price of the commodity, which again is good for the consumer, good for the corporations that are using natural gas and energy for transportation and fuel and so forth and power. But it's not so good for the companies. So again, you have these balancing acts here. And one thing I would say, about all this rhetoric, no one really knows how this is going to play out. For every action, there's some sort of other side of that, which we don't know. You know, if anyone thinks they can predict, that I think is pure folly. So we'll just have to see how these things play out. You know, the energy companies have been very good in terms of controlling their spending, their CapEx, and their costs. And it's obviously helped them from the standpoint of cash flows and reducing debt. The stock prices haven't done so well, except for companies like Kinder Morgan, Energy Transport, Texas Pacific Land. Those stocks have done fabulous, but that may be more due to the energy needs in this country due to AI and the whole grid and so forth. So again, there's all kinds of reactions that you may not expect. And who would ever thought utilities and pipeline companies would be doing as well as they have over the last 6 months in the market?
Greg Halter, Director of Research at the Carnegie Investment Council, about $4 billion in assets under management. Taking a look at the markets, the S&P flat, so is the NASDAQ, the Dow up 0.7%, and Bitcoin up 9%, 73,000. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Emily Griffeo. I am Tim Stenevec. A quick correction. Just a few minutes ago on the way out, I misquoted the price of Bitcoin, $87,400. I was looking at the net change for the day. Yes, it's up. It's more than $7,400 just today.
Easy to get it wrong because it's so surprising. We've never really seen Bitcoin at this level, this high.
No, every time I look at the screen, it's just going higher.
Yeah.
I don't know what's going on.
Well, I think it really is a momentum trade, but also people, like Mike Regan said a few hours ago on this show, people getting really excited that Trump is going to be pro-crypto. Whatever that means exactly, one tangible reason is Gary Gensler. He doesn't like Gensler. The crypto community thinks that if there was another head of the SEC, there'd be more crypto products allowed. So it'll be good for Bitcoin at least.
We'll see what happens there. I liked Mike Regan's point about a strategic Bitcoin reserve.
Yeah.
And the idea if the U.S. buys Bitcoin every single year and stockpiles it, I mean, that would have a huge upside. And perhaps that's what we're seeing also play out right now.
Yeah. But, you know, it's not just Bitcoin,
It's
Tim,
not?
That's, people are paying attention to
What's
today.
in your radar?
I'm thinking about something that, at least if you're building a portfolio, you are not going to keep this in the same sleeve of the portfolio that you keep your
What do you mean?
Bitcoin
What do you mean?
allocation. I'm thinking about money market funds.
Oh, yeah.
So
I saw this.
Yeah.
You wrote this story.
I wrote this story.
Okay, what's going on?
So BlackRock has filed to create 2 money market ETFs, which kind of is like, why would they?
I mean, aren't they money markets are mutual funds right now?
Yes. So money markets are mutual funds right now, but we know that the industry more broadly is pivoting to like making an ETF out of everything. And you do get more intraday liquidity in an ETF. So we haven't heard much from BlackRock because they filed, so they can't really talk until the SEC has approved the filings. So we don't know exactly who this is for. Our best guess is RIAs. They're moving towards more ETF-only models, and so it might be easier to have just everything ETF-sized, basically.
Is it a strange time to do this because interest rates are coming down?
Interest rates are coming down, but actually assets in money market funds keep going up.
It's great. I see this like, a redhead crosses the terminal with like X trillions of dollars.
Yeah, every day, like new record in money market funds.
I'm like, where is this? Why is this money going into money market funds right now?
Right, when rates are down. It's not that intuitive, but we actually saw the timing with the BlackRock ETFs. We saw the first money market ETF actually launched 2 months ago. It's from Texas Capital, which is quite surprising, but they have Ed Rosenberg. He's an ETF industry veteran. He works at Texas Capital, and he's trying to do some innovative ETF products. So he came out with this money market ETF. It follows Rule 2A7, which is technically like those are the provisions that govern money market funds. So there was never an ETF that followed these rules. So there were short-term bond ETFs that people were using for their cash-like allocations, but there was never actually like a money market fund.
Is this just following the whole notion that anything that can be an ETF will become an ETF?
Yes, exactly.
What's left?
Well, obviously, like private assets, there's been a big push there. We haven't actually seen a fund launch, but State Street, Apollo are working to try and put private assets into ETFs. But anything that's like not that liquid is going to be harder to put in an ETF because an ETF trades every day. That's why we know how people feel about bonds today, because you can see trading in bond market ETFs.
Yeah, that's a really good point.
Yeah.
Even though the bond market's not open, we can see what's going on
In ETFs.
Okay, check out this story. Emily Griffeo wrote it along with Katie Greifeld. BlackRock targets money market fund business in new ETF push. You can check it out on the Bloomberg terminal. Taking a look at markets right now, we're pretty much flat on the S&P 500 and the NASDAQ. The Dow, it's higher, but Emily says we don't care about the Dow.
Russell 2000, small caps.
Yes, that's the story today. Thank you.
1.4%. That's where all the movement is.
Coming up next, we count you down to the close.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlet Food, taking you through the Closing Bell, a global simulcast. It starts right now. Tim Stenovic in the radio booth. Emily Grafeo in today for Carol Masser as we welcome our audiences across all of our Bloomberg platforms, radio, television, and that includes our partnership with YouTube. Tim Stenovic, record high for the Dow. The Russell 2000 at one point came 1 point away from a record high itself, Tim. Pretty good day.
You know what is at a record?
No.
Bitcoin.
Oh, I heard.
Yeah, every time I look at CRYP Go on the Bloomberg terminal, I just see a sea of green.
Yeah.
Bitcoin up another, what, 9%?
Yeah.
$7,000 higher.
Yeah.
Around $87,000 per Bitcoin.
Does this mean the crypto show will continue?
Oh, the crypto show. Yeah. We are on tomorrow. You know, we were off last week because of the election.
I heard.
So
you should have been there.
Tomorrow's an extra special.
Yeah, I'll talk to somebody for you.
You know, it's kind of surprising to see the NASDAQ 100 end the day in the red when Bitcoin is higher. Usually you see those two trading in tandem.
Yeah, well, I mean, if you look at the Mag 7, it's all Tesla today, essentially. Maybe a little bit of contribution from Alphabet, but Tesla is the star of the Mag 7, and then everyone else is kind of on the back foot as people rotate away from those names into small caps.
Yeah, and it's kind of interesting, too. We're kind of headed into kind of a weird period where there's not going to be as many catalysts as we had really over the last 3 weeks or so. The election's out of the way, the Fed is out of the way, and earnings season at least starting to wind down. The lion's share of the big companies, of course, have already reported with a couple notable exceptions. The VIX still tamped down here. And we still got dollar strength here as well. So it's kind of interesting to see how all of this stacks up. And, of course, we have to wait for the bond market to reopen Tuesday to see whether that sell-off in treasuries continues here as yields continue to push higher and what that backdrop is going to mean for equities. We do get the closing bells here on this Monday afternoon, and there is a lot to cheer about here. Modest gains, to be sure. Let's actually start from the right side of your screen there. A NASDAQ composite that had been in the red for a good portion of the day, now punching into the green. It takes a while for these numbers to settle, but it looks like it is going to settle in the green, only up by less than 0.1%, but that's going to be good enough here for another record high. The NASDAQ 100, though, still in the red. The S&P 500 looks like it is going to settle in the green, up about 0.1%, above 6,000, a record high. The Dow Jones Industrial Average up 0.7% at a record high. And the Russell 2000, which at one point on the day did trade about 1 point away from its record high, falling just shy of that, but still a relatively good day, up 1.5%.
Record highs across the board. Taking a deeper look into the S&P 500, we do see 305 stocks moving higher today, 197 stocks to the downside.
All right, let's take a look at the sector performances as well. The heaviest weighted and most influential group in the S&P 500 is technology, and that, in fact, is the biggest drag on the stock market today. You look at the 11 sector groups, and Infotech is down 0.9%. Real estate investment trust losing 0.8%. Healthcare also lower. The big gainers are financials, industrials, and consumer discretionary, and that's really on the back of Tesla.
All right, well, let's talk a little bit about some of those gainers. Scarlett, you went right there. Tesla is my first one. Shares extending gains for a fifth consecutive session today. Tesla shares moving higher once again. Wedbush hiking its price target to a Wall Street high. Shares higher today by 9%. The rally catapulted Tesla's market cap back over $1 trillion. That was on Friday. Wedbush analyst Dan Ives raised the price target to $400 from $300. He came out and said that a Trump White House win will be a game changer for the autonomous and AI story for Tesla and Musk over the coming years. Also, taking a look at pharmaceuticals, Bristol Myers Squibb shares surging. This as a result of a loss for AbbVie. AbbVie's new schizophrenia drug failing 2 trials. That setback viewed, though, as a victory for Bristol Myers Squibb, which in late September gained U.S. approval for the new first type of schizophrenia drug in 7 decades. At one point in the day today, we saw Bristol shares jump the most since the year 2000, off the highs of the day, but still finished higher by more than 10%. And finally, talking quite a bit about crypto today, given all the action that we've seen in the crypto market, MicroStrategy, it's a levered play on Bitcoin. We did see crypto-linked stocks just surging today. Crypto being boosted by President-elect Donald Trump's embrace of digital assets. The company MicroStrategy bought about 27,200 Bitcoin for around $2 billion. It was the largest purchase by the company since just after it began acquiring the digital asset more than 4 years ago. MicroStrategy has outperformed every company in the U.S. over that period. Even NVIDIA.
It's funny. I was looking at kind of the outperformance that we've seen, or at least the stocks that have rallied the most since the Trump trade. Obviously, in the S&P, it's basically Tesla, and I think some of the financial companies were in there as well. But yeah, when you sort of broaden it out to that small cap space, include some of those small and mid cap names, it's all crypto all the time.
All right, well, let's get to the decliners. I'm looking at AbbVie, the biggest drop since March 2020, down 13% today after 2 mid-stage trials of its schizophrenia drug failed to meet their primary goal. The drug did not show a statistically significant improvement in symptoms, and higher doses did not appear to be more effective. The failure of the trials set to be a setback for that pharmaceutical company. I'm also watching Super Microcomputer because this was one of the worst performers in the S&P 500 on the day, and it's the worst performer in the benchmark index over the last month, down 50%, coming after a number of kind of bad news for this company, a scathing short report from Hindenburg on Super Microcomputer. There was no real fundamental news driving the stock lower today, but I'm just guessing it's kind of all of those headwinds or tailwinds on the company, and they also had some earnings misses last week. And then finally, Monday.com. It was not a Monday for this company, not their Monday. That stock down 14% after the software company reported third quarter results, which Citi said had missed elevated expectations. Some consumer metrics also slightly softer relative to recent quarters.
All right. This is the part where my producer tells me to talk about yields. But, of course, the Treasury market is actually closed today for the Veterans Day holiday. So I'm just going to actually read you some entertainment news here.
Okay.
I'm learning that Megan Fox is pregnant now by Machine Gun Kelly. Also, it's Leonardo DiCaprio's 50th birthday. Congratulations to that guy and his yes.
Hold on.
Congratulations to him and his 25-year-old girlfriend.
There you go.
And then also here, some other interesting news. Just crossing the wire here, Bobby Flay signing a new multi-year deal at the Food Network. That's courtesy here of Variety.
I get all my news. I'll get all my celebrity news from Scarlett because she follows this stuff closely.
I did not know it was Leo's birthday, but I'm glad you mentioned.
Sure.
You know,
that's what I'm here
social
for.
life.
Anything else you want to talk about?
There was a good story, especially as we gear up for earnings season for retailers. Macy's, of course, going to be one of the retailers that will be reporting, and they're really changing the way that they are presenting some of their best-selling products, and that would be shoes. They kind of needed to fix things because there are too many things available on the display floor. It was kind of like they're trying to match Amazon with all the different selections, and it just overwhelmed people.
Well, I sort of like this, and you know, I'm gonna tell the story. So years ago, I interviewed at the time the CEO of Lord & Taylor, which of course is now kind of defunct. But she made a big stink about this idea of kind of being anti-Macy's, the idea that Macy's was too cluttered and that they were trying to create a program. And this was like, I don't know, it's like 25 years, I'm dating myself. This must have been like 25 years ago. So it's kind of interesting to see that now they finally sort of found religion and realized that. Yeah, and I do think so. I mean, as somebody who pops in there from time to time, it does seem like sometimes it's just too much there. And I know maybe some people like that, but I feel like the minimalist trend, like that's in now. You go into some of these boutiques on Madison Avenue, they got like, you know, it's like 5 dresses in like a 25,000 square foot space.
So what is curated?
Yeah,
right?
I was going to say.
Okay.
I mean, look, I think that makes sense in an environment where you can go to your Google search bar and type in basically, you know, men's or women's shoes and see tens of thousands of options. So you kind of want some guidance. You kind of want some guidance where you're going. You want help. We'll see if it plays out for them. We'll see if it works for them. I mean, Sony Spring's got a big job in turning around Macy's and kind of figuring out where it goes from here.
Emily, do you shop there?
So I was going to say I like trying on shoes in the store. I haven't been to a Macy's because the one on 34th Street is a little chaotic to go into. But I do like trying on a bunch of shoes. So I would prefer to go into a shoe store that had a really big selection.
So they do want you to try on shoes, Emily. That's part of it. But they want to make it more streamlined, and they want to make it so that you don't have to wait 5-10 minutes for someone to disappear into the back and get your size, right? And they can do that if there are fewer shoes on display. And they can also point you in the direction of, you know, we don't have that in this color, but if you want to order from our website, we can send it to you for free, deliver it. And those are all options that they present. Certainly they did when I was at Bloomingdale's a couple of months ago, and they didn't have what I was looking for, but you know, because there are fewer options available, they're able to set you up with delivery right away.
But that's basically the value proposition that a brick and mortar store has to offer, right? It has to offer something that you can't get online. And I guess that in this case would be a curation experience where you can talk to somebody whose job it is to actually do this, and they can match you with the right pair of shoes. once again, we'll see if it works.
All right, I just want to bring you some earnings here, Tim Stenovic. Live Nation crossing the wire right now. The company reporting revenue in the most recent quarter of about $7.65 billion. That's a slight miss. Street was looking for 7.8. Operating income, though, does look like a beat at roughly about 909. We'll round it up, $910 million on an adjusted basis. Street was looking for roughly 857. Shares higher by 7%.
Well, yeah, stock surging in the after hours. We'll see what they say on the call. Reminder that earnings season not quite over at this point.
It never ends.
It's never over. Hey, what is over is our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We're going to be back with you all tomorrow, same time, same place.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovic on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenovic. That's Emily Grafeo in for Carol Masser this afternoon. Well, I don't know if you saw this, Emily. We've been talking about U.S. equity markets, but emerging market stocks and currencies slid on Monday. They were weighed down by concern over the prospect of U.S. tariffs under President-elect Donald Trump and disappointment over China's latest stimulus measures. It's the U.S. tariffs part that I want to focus on here, and that's why we're bringing in Erica York. She's senior economist at the Tax Foundation. It's a nonpartisan tax policy nonprofit. Erica joins us from Manhattan, Kansas this afternoon. We're all trying to figure out, Erica, how much tariffs are going to cost and how much money tariffs are going to bring in and who's going to be paying for those tariffs. Help shed some light on this.
Those are the big questions. We've estimated a 10% universal baseline tariff, so applied across the board to all imports, would raise about $2 trillion in tax revenue for the U.S. government over the 10-year budget window. For the average household, that would be an annual tax increase of more than $1,200. If the universal tariffs were 20%, the revenue wouldn't quite double because imports would drop by more. But we've estimated that would bring in about $3.3 trillion for the government and increase taxes by more than $2,000 for average households. Now, those are all big numbers, but they would not come close enough to offsetting the cost of the tax cuts that Congress is considering along with President Trump. So they would generate a lot of revenue, but not enough to pay for the tax cuts. And even so, lots of lower and middle income households would be worse off under some type of tax and tariff combination.
What does that mean for GDP then, when you have kind of the tariffs not quite, I guess, balancing out the revenue hit that they get from the tax cuts?
It could actually mean we're in a situation where we have a combination of policies that on net cuts tax revenues and also shrinks GDP. It'll really depend on which dials Congress turns on the tax policy side and how far Trump or Congress together go on the tariff side. But tariffs will create a drag on economic growth and potentially a big enough drag when you factor in foreign retaliation that it offsets the economic benefit of better tax policy.
Enough drag that you'll see pushback from within the Republican Party for President-elect Trump not to do this when he takes office?
Maybe. I certainly think there's support for the China-specific tariffs. I think the universal tariffs are where there's more chance for pushback. But, you know, this was a huge part of Trump's campaign platform. And there's kind of two sides. If you listen to some advisors around President Trump, they'll say this is all just bluster. These were just campaign ideas. But if you listen to others, and particularly look at like things that Robert Lighthizer has written in a book, there's huge support for universal tariffs, both as a revenue mechanism and as a trade policy. So I think there's just too much uncertainty to say what's going to happen. But I come down on the side where I think the tariff threat is very real. And I hope that Congress can maybe pull the president back on it to some extent.
What would be your message to lawmakers? I mean, you have the numbers, and I'll be honest with you, Erica, we had a lot of numbers before the election as well. And obviously that didn't sway voters. The idea of them paying more as a result of tariffs wasn't something that resonated with them, or maybe wasn't something that they necessarily believed. So Actually, I'll start with the message to them. Like, what would your message to them be, given that this is something that Americans voted for?
Maybe they voted for it. Maybe they voted for Trump's version that says China is going to pay for the tariffs and they're going to create jobs here. I mean, that sounds great, right? But unfortunately, that's not reality. Ask a small business, ask a farmer who is impacted by tariffs. It's businesses in the U.S. that are importing the things they need to do business. So those tariffs are going to raise the cost of doing business here. The immediate effect of that is U.S. business owners asking, am I going to pass these costs on to my own consumers, or am I going to have to cut back? Am I going to have to cut jobs? Am I going to have to cut wages? Am I going to have to cut production because I can't afford to do business here anymore? So the impact would be real and would be felt by Americans.
Do you recall when the USDA gave billions of dollars to agricultural producers who were affected by the retaliatory tariffs from China? We're talking soybeans, corn, wheat, dairy.
Yes.
This was like a bailout by the Trump administration.
Yeah, pork producers, sorghum producers. China quit importing U.S. ag products. That meant export losses, which directly reduce income for U.S. ag producers. And to compensate them for that, the U.S. government made direct subsidy payments to farmers. And in fact, they used up about 90% of the tariff revenue that came in from U.S. imposed tariffs to bail out farmers who are hurt by retaliation. That undercuts the message that we're going to use tariff revenues to do other things like tax reform if we actually just have to send it right back out the door and compensate sectors that are hurt by retaliation.
What timeline are we talking about here? When would we potentially see the effect of these tariffs if Trump, I guess, is able to pass everything that he actually wants to?
Yeah, again, uncertain. It's likely that new investigations would be opened up right at the outset when Trump takes office. Those can take, anywhere from more than 200 days for the Commerce Department to fully go through that, to issue a report, after which the president recommends what actions he wants to see taken. So if it goes through those channels, it wouldn't be immediate. Now, there's some talk that Congress is considering legislating tariffs as part of a tax reform package. That could potentially be quicker if we're under full Republican control and we have reconciliation. I think that's less likely, though, because I don't think there's broad GOP support to vote on significant tariff hikes. So it's probably going to take the executive route. And depending on, what authority the president uses, there's processes set out in law that dictate how quickly those tariffs can be put in place.
Erica, I'm glad you're talking about tariffs, and it's something that we've talked a lot about, and we're going to learn a lot more about, at least how Trump implements them when he does get into office. What other parts, but it's not his only economic policy. This is what you're focusing on today. It's what the new report that you have from the Tax Foundation is. That said, what other policies should we be focused on ahead of the inauguration?
Yeah, the big thing on the tax policy side is that the vast majority of the changes made by the 2017 tax law are scheduled to sunset after 2025. So that's all of the individual tax cuts, the estate tax changes. There's changes on the international side that are scheduled to take place. And there are important business investment provisions that are phasing out, like bonus depreciation, or that have already changed, like R&D expensing. All of those are going to be on the table in 2025. And lawmakers right now are working on their game plan of, what are we going to do? Are we going to extend these? Are we going to make them permanent? How do we pay for it? Trump will, of course, have a major influence over that legislative process. And it could get going very quickly when Congress comes back in town next year.
Well, you're going to have to come back before that. We definitely appreciate your time. Erica York, senior economist over at the Tax Foundation, joining us from Manhattan, Kansas. Again, the Tax Foundation, they're a nonpartisan tax policy nonprofit. They're out with this new estimate of that universal baseline tariff, finding that a 10% universal tariff would raise $2 trillion and a 20% universal tariff would raise $3.3 trillion. That's between 2025 and 2034, excuse me. But that would end up costing 10% on average, $1,253 in increased taxes, and 20% would increase taxes on U.S. households, according to the Tax Foundation, by about $2,000 on average. Emily Grafeo in for Carol Masser this afternoon. I'm Tim Stenovec. You're listening to and watching Bloomberg Business Week.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Got to begin with Bitcoin because Bitcoin now closing in on 88,000. Right now, Bitcoin's at 87,886. Bitcoin is up 10% today. Right now, looking at a gain for Bitcoin, it's higher by 79.64. But again, right now, Bitcoin at 87,904. Stocks higher for a fifth session. Bitcoin topping 87,000 for the first time. The dollar hitting a one-year high. Investors continuing to bet those trades will benefit from President-elect Donald Trump's agenda. S&P closing back above 6,000, traded below that threshold for much of the day. We've got the S&P at 6,001, up today by 0.1%. NASDAQ eked out a gain, up less than 0.1%, but higher by 12 points. The Dow up 304. Dow Industrial is up today by 0.7%. Spot gold down 2.3%, down $62 the ounce. ounce to $26.22. West Texas Intermediate crude oil down 3.2%, $68.14 a barrel. Again, recapping and repeating, Bitcoin now at 88,000 on Bitcoin right now, up by 10.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. Well, we honor those who serve each and every day, but especially today because it's Veterans Day. And from an investing perspective, remember, we are Bloomberg. We're thinking about data. We're thinking about money. Not everybody has the same needs, and that's where Siebert comes in. Mark Malik is Chief Investment Officer at Siebert, and Kaj Larson is Head of Military Investing and Communications at Siebert. He's also a 5-year active duty Navy SEAL officer and currently serves as a SEAL Reserve officer assigned to U.S. Special Operations Command. They both join us here in the Bloomberg Interactive Brokers studio. Guys, good to have you with us. How are you?
Good. Thanks for having us. Awesome. It's an honor to be here.
Well, we're happy to have you guys. Look, I want to start with you, Mark, because Siebert's a unique organization. I mean, I used to be on the floor of the New York Stock Exchange, and that name just has a lot of meaning because of who founded the firm, and she broke a lot of barriers. Talk a little bit about how that philosophy plays into sort of the DNA of the firm.
Yeah, interestingly, you know, the firm is as old as I am, and if you look at me, you can tell I wasn't born yesterday, so the firm's been around quite a long time. Unfortunately, Mickey is no longer at the head of the firm. However, you aptly put, her DNA is still with the firm. We're very much focused on the client. We're a very client-oriented firm. I know everyone will tell you that, but in this day and age when everything has pretty much gone digital, we got all the digital stuff, but we still got a lot of people that are focused on the client. And pretty much everything we do is focused on the client, and we retain that, and that's what makes us a little bit unique in an industry where everyone does everything. We do everything, but we still focus heavily on the client.
Yeah, the namesake of the firm, Muriel Siebert, the first woman to own a seat at the New York Stock Exchange. So talk to us a little bit about veterans' needs and why you have a dedicated vertical at Siebert just focused on veterans.
Right. So, you know, Kaj could talk a lot about this as well, but, you know, we know that, you know, veterans are very much underserved in the investment community. With the help of people like Kaj, we were able to come up with things that we think would resonate more with that community in terms of education, in terms of specific types of investments that would resonate with them, things that they want to see, things that they're comfortable with. You know, we have the traditional stuff, but, you know, focusing on what their needs are, what makes them comfortable is really important to us. And that's how we've designed all of our investments around that.
So, Kaj, come on in here because you have a history in the military, active duty Navy SEAL for years, still involved in the military at this point. How much did you think about investing when you were actually serving?
Well, not nearly as much as I should have, Tim, right? I was more focused on gunslinging at the time.
Look,
right?
That's the answer I was expecting to get.
Yeah, yeah. And now what I'm trying to do as a more senior officer is help like young people at the beginning of their service members' journey be a little more sophisticated than I was, right? And one of the ways we're doing it at Siebert is kind of adopting the same model, a fusion model that we did in the military. In mission planning, we say Intel drives operations, and we're using that same paradigm at Siebert, right? So I have Mark over here. He's the 10,000-pound brain, right? I'm the Paleolithic knuckle dragger who's going to execute all of these really interesting and dynamic portfolios that we've created, and that's how we're doing it. I think the key here is that the veterans community and the military community is not a homogenous organization, right? There's a lot of variety, and there are no one-size-fits-all solutions. So what's helpful about having someone like me with 13 years of total service, I continue to serve in a special operations unit. I understand I've walked a mile in the boots of similar to a lot of these military members and veterans, and so then I can help calibrate, I can help educate, and then help calibrate appropriately to help build wealth within this community that, as you mentioned at the top, is often left behind by the private wealth community.
Kaj, what are you seeing right now? What are people who are currently serving asking about when it comes to their finances? Is it more budgeting? Is it what should I invest in? Is it saving money?
Well, today, like everybody else, they're asking about Bitcoin, right? And the truth is, the military has actually been leading edge on some of this stuff, right? Bitcoin itself comes out of a sort of cryptological function that was developed in the military. So there actually is some interior and intrinsic knowledge that service members have, but maybe don't necessarily realize that they know, that can help them in their investing journey. In general, absolutely, you hit the nail on the head. Right? First, we have to tickle interest in investing, right? And you have to save before you can invest. So a huge part of our firm and our mission is devoted just to closing this knowledge gap in order to like increase the rates of financial literacy. We're not the only people that are doing that. There are organizations within the Pentagon, the Office of Financial Readiness, and then organizations, private sector organizations like us outside the Pentagon that are doing it. But it really takes a village to make a smart Marine put his money somewhere good.
But I guess the challenge is, Kaj, that oftentimes somebody gets done with being in the military and they don't necessarily have enough money to start to put to work. They're more focused on providing basic necessities and providing basic needs. I mean, we talk all the time about the inability of this country to serve its veterans.
Yeah, I would push back on that just a little bit. I think in general that principle is right, but contrary to popular belief, and this is part of the reason that the military community has been kind of largely ignored by the street, is they always thought that the account sizes are too small, they don't have enough money. But relative to their socioeconomic peers, actually service members often have quite a lot of discretionary spending. And it's because of non-calculated things like the cost of healthcare, something that a lot of military folks don't have to worry about. Things like BAH, basic allowance for housing, right? So because of that, they have more, I'm not saying a lot necessarily, but more income relative to their socioeconomic peers. And frankly, like, yeah, we're an old firm at Sieber, but like cutting edge technology, right? Things like, you know, the advent of fractional share investing. We say like you can start investing with as little as $1, right? The problem for us from the financial education literacy perspective is, you know, you still get a lot of young enlisted guys in the military going out and buying that new Mustang at a 21% interest rate. There's an entire predatory industry designed to take service members' money, and only a few of us focused on building their wealth.
So, Mark, when you're thinking about where to actually allocate portfolios, do you make veteran-specific trades? I'm an ETF reporter, and so there's a number of ETFs out there that are focused on defense spending or infrastructure or crypto. Is that kind of your approach to investing?
Partially. I mean, at the core, we stick to the standard principles of investing, right? So we try to match up portfolios to risk tolerances of the clients. But we also like to put things in there that the clients understand and that they would want to invest in themselves. And so the idea is to get them to focus on more long-term investing. When a lot of these young hotshots come out, they want to put it all in Bitcoin or something like that. But we try.
They would. By the way, that would have been a good move.
Right. Exactly. You caught me, right?
No, yeah, you don't see me doing it.
Yeah,
but yeah.
Similarly, but we try to teach them that sort of long-term focus. But still, at the end of the day, we want them to be able to open up their accounts and see ETFs in there that resonate with them, right? So yes, we do put those types of things in there that they would say, yeah, I know what that is. I get that. I'm happy that I'm putting my money there. And so on top of that, we're constantly managing them to stick with their risk. So for instance, you brought it up, if Bitcoin was in their portfolio, obviously Bitcoin, the risk of Bitcoin changes as it goes up and down, mostly up. And so, we've got to constantly be managing that to make sure that the portfolio is still in the right balance for the client.
Is that part of the portfolio now? Is Bitcoin part of it?
It is not a core part of the portfolio, but it is something that can be added to the portfolio.
But it's not the type of thing now that you're saying, okay, if you want to invest in this stuff, you're doing it outside of Siebert.
No, we help them with that as well, right? So our hope is to manage their core money, right? Mm-hmm. So we're like let's call it the savings account of yesteryear for them, and then we do encourage them to go out and try other things, and we help them with that as well. We advise them on that as well, but we always like to know that the core portfolio isn't that important. Set of ETFs that is going to provide them with that risk-adjusted return that's right for them.
And to underscore Mark's point, we try and speak to our service members in language and metaphors that they understand. So we say, just like you wouldn't go to war with a single bullet in your magazine, we expect you to have a diversified portfolio, many bullets in your magazine, and we expect you also, just like in mission planning, to have contingencies, things like a rainy day savings account and things like that. So the tried and true principles of investing are really good for the military community with some of the additional sidecars that you guys were just discussing.
Can you talk ETF tickers? Are there any particular ones that you like right now?
Remember, she's an ETF reporter.
Yeah, so for us, yeah, it's interesting. So for us, it's not that we like the tickers as much as we want to have exposure to those tickers, right?
Yeah.
So when we select a ticker for our portfolios, it's going to be based on what type of exposure will it give us to, say, defense, right? And then we will look at the ones that do the best job, right? The ones that have the best tracking error, the ones that are the cheapest, right? And of course, the ones that are also have liquidity, right? So we want to make sure that there are a lot of great ETFs out there now, especially some of them which are actively managed, but they're very tough liquidity-wise, and we want to be able to give access to our clients very quickly to their cash and be able to rebalance when appropriately. So what we do is we take the best of the breed, and then we change the allocations based on how well the market's doing, how well the ETF might be doing. So we might take some off the table, we might add some to the table based on what our algorithms are telling us.
Hey, we only have about a minute left, but then we're going to come back with both of you after we do some news. Kash, I want to let you just close it out here. I'm curious what you're hearing now from active duty service members that's kind of different from when you served earlier in your career. I think you're still active duty, but reserves.
Well, now on the reserve side, serving in another, we could waste our whole minute talking about my circuitous career journey in the special operations community. But in short, what I'm seeing is an increased level of sophistication when it comes to financial knowledge and literacy. Like, whether that's actually translated into investment is still to be determined, but there certainly is more interest, there's more information, there's more alternative sources for information, and you're starting to see, especially with the advent of these alternative assets, service members paying more attention than they had in the past. The other small thing, and I know we only have 10 seconds here, is that the military retirement system has changed, and that's made it that's a forcing function to make people be smarter about their pay.
Sit tight, guys. We're going to be right back with Mark Malik, Chief Investment Officer at Siebert, and Kaj Larson, Head of Military Investing and Communications at Siebert. This is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Another day of records for the U.S. stock market, but we also saw Bitcoin push higher above 88,000. A record there, 88,047 right now on Bitcoin, higher now by 10.2%. The Dow, the S&P, and NASDAQ all advanced today with the S&P 500 index up 5 to 6,001, a gain of 0.1%. The Dow up another 304 points, up 0.7%. The Dow 44,293. NASDAQ at 19,298 for the NASDAQ Composite Index, a gain right now of 0.1%. Spot gold down 2.3%, 26.21 the ounce, and West Texas Intermediate crude down 3.2%, just above $68 a barrel, 68.14 on WTI. Greg Halter is Director of Research at Carnegie Investment Counsel, and right here on Bloomberg Business Week, he talked about the run-up in the equity market since the election.
It's definitely remarkable, although if you look back at history, in cases where you have a unified government, one party or the other, the equity markets tend to do well leading up into the inauguration, and we're also in a very good seasonal part of the year, November being, I think, the best month. So we've got a few good things going for us.
Greg Halter of Carnegie Investment Counsel, interviewed right here on Bloomberg Business Week. So again, recapping, stocks push higher, S&P up another 5, up 0.1%, and Bitcoin now with an 88,000 handle. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. I want to get right back to Mark Malik, Chief Investment Officer over at Siebert. Cash Larson, Head of Military Investing and Communications at Siebert. Cash, also a 5-year active duty Navy SEAL, currently serving as a SEAL Reserve Officer assigned to U.S. Special Operations Command. Not going to have you give up any state secrets at this point, Cash, but...
Well, I will say it's a teeny bit dated. I've retired from the SEAL teams, or I've left the active duty and the reserve SEAL teams, and now I'm serving a new special operations unit for the state of Florida. So yeah.
And on Wall Street.
But that being said, and on Wall Street. But that being said, I'm still not giving up any state secrets. Yeah.
Okay. And just give us an idea of what that looks like in terms of how you're able to do those things concurrently. I think a lot of people have misunderstandings about how the reserves work or how people are able to continue serving their country following like a full-time stint in the military.
Yeah, absolutely. Well, the reserves have for a long time been an essential part of the Department of Defense and our national security apparatus. And when I was a reserve officer at U.S. SOCOM, I had a civilian job, and I was in media. I was a war correspondent at CNN, and then I had an HBO series and a Netflix series, and I was able to balance those effectively with my time still in uniform. I'm doing a very similar thing now, as I'm running the military vertical here at Siebert Financial, and then simultaneously still able to serve in a special operations unit for the state of Florida. So, look, it's hard, and a lot of military folks face these kind of challenges. They say if your boss is slightly unhappy with you, your commanding officer of your reserve unit is slightly unhappy with you, and your wife is slightly unhappy with you, you're probably doing all three okay. But it does speak to and underscore the challenge of life as a service member, is that you often have incredible sacrifices that you have to make, and you have to balance this civilian side and military side of your life. That extends all the way to your finances, kind of the foundation.
So, Mark, come on in here, because you are Chief Investment Officer over at Siebert Financial, so we'd be remiss if we didn't ask you, like we're asking everyone, about the state of the markets these days, especially given what we've seen over the last week after the decisive victory by President Trump.
Yeah, it's been an interesting couple of weeks for all of us. You know, we had all those great earnings just prior to the election, and we haven't even had a chance to really sort of look at these, you know, this rash of Mag 7 stocks that we heard from that's been driving the markets higher, and suddenly
Tesla still,
and suddenly we get the elections, and now we're focusing, you know, not on the Mag 7 but the MAGA 7, right? So, you know, we're trying to figure out, you know, what of this stuff is going to stick, what is not. A lot of it is a little, I would say, probably took some of us by a little bit of surprise in terms of magnitude. But in terms of the things that have been going, you know, the handwriting was kind of on the wall. So, you know, we're seeing, as we expected, we expected a continuation of the prior trends, maybe a little bit turbocharged in those areas that Trump was very clear that his administration would focus on. But, you know, in terms of the magnitude, it puts us sometimes in a rough position, saying, yeah, well, we like this sector, but we can't get into this sector now because it really played out a little too quickly maybe last week.
So what specific sectors come to mind when you're thinking about, now we know who the president is, so we have a better idea of what policies are going to be in play than we did maybe a few weeks ago?
Yeah, so I think for us, you know, we expected, you know, the financial sector to definitely get a boost, you know, increased deal flow, you know, all sorts of deregulations, things like we all expected that. And the interest rate environment, although that is rapidly changing, that should be an environment that should be pretty good for, you know, traditional lenders and things like that. I think that the markets responded much more aggressively than we expected, although we still believe that there's room, but we have to be a little bit more careful with that. You know, obviously something that we've focused a lot on that may not be attributed to Trump is, you know, we can't ignore technology, broader technology, information technology sector, and also in, you know, in the telecom sector, the communication sector. You know, we saw a lot of potential there. The what I call the AI ecosystem. We believe that is going to continue to move. But under a new under Trump, we have to look at things a little bit differently, right? So, you know, I've always used the supply chain analysis on the Bloomberg, right? And it's becoming a more and more important part of our life every day. As we're looking at any company, we're checking geo exposure from these companies, and it's part of it's a factor now in our models. Where prior it was just something to say, well, if there was increased tariffs, or what does that mean to this company? It is, you know, that and interest rates, right? Which I'd be watching one on each one of these screens right now.
Right. By the way, the supply chain analysis function on the Bloomberg terminal, SPLC. I don't know about you, Emily.
It's my favorite.
My favorite.
It's one of my favorites.
It's pretty cool.
ETF Go is one of my favorites too. I got to say that. But yeah, I love that one.
Yeah.
I actually wanted to go back to something you had said earlier about how, you know, people had been piling into the Trump trade before the election results came in.
Yeah.
So does that mean that you kind of fade the Trump trade now? You don't buy the traditional, like Bitcoin, industrials?
Yeah, it depends. It depends, right? So, it was very interesting. Another thing I like to do is, on the Bloomberg, we get to see the real clear politics. We were able to track the numbers as we were running up to the election. You're able to sort of plot them next to any of these sectors, and you could see how they behaved as Trump's chances went down and they went up, and you could see the clear relationship. And if the relationship made sense, right, then you have to dig further into it. But as you said, in a lot of cases, we're very fortunate we get to focus on long-term investing, right? And so, we're not necessarily, well, we try not to concern ourselves with what's happening right in front of our feet. We like to think, super long-term, which today's day is like 2 years, right? So we're starting to think like that. So a lot of these trades, we feel are trades that make sense. Some of them are a little out of control. I won't mention any names of specific stocks, but some of them traded like meme stocks, I think, and these are good companies that may not be meme stocks, but they're behaving like meme stocks. So you have to take a step back. I mean, even if you take a look at Bitcoin, which is raging, we allocate to Bitcoin. We think it's something that we need exposure to, but would we put new money in at this point? We think it may do better under a Trump. At this stage, we are in a show me stage. Let's see what you can do now. We can't make any speculations anymore at this point.
Cash, I want to give you the last word here. Got about 30 seconds left. You see a lot of technology in the military, and we oftentimes see technology develop from military tech. What's exciting to you out there right now?
I think there's a bunch of stuff. There's been some tectonic shifts in the nature of warfare. I think a lot of people followed the Anduril acquisition, which came straight out of the Ukraine war, and how drone technology has changed the nature of warfare. I think military people are particularly attuned and particularly acute to these changes in technology. I've been using Palantir for probably 15 years in an operational capacity. So every once in a while, while we're not always the most sophisticated conglomerate, we do have access to some emerging technology, and I think that's a strength.
Cash Larson, Head of Military Investing and Communications, and Mark Malik, Chief Investment Officer at Siebert Financial.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is a Bloomberg Business Week. That's Emily Grafeo in for Carol Masser this afternoon. Emily on the cross-asset team with a focus on ETFs. What would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or the community section to take the survey. It's hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcasts. Emily, what's on your radar right now?
Well, I'm not going to say Bitcoin because
we're like a broken record?
We're like a broken record. But, you know, we didn't really talk that much about small caps. And the Russell had a very big day today. It was up 1.5%, while the broader equity indexes were basically flat. And so we were just asking our prior guest whether the Trump trade is over or not. Small caps are kind of a Trump trade. But also people wanted to buy small caps like months ago, too. So maybe it's just more a bet that rates are going down.
It's like they're catching up with the other trades.
Yeah. But if rates stay high, then that would damage.
Look,
so a lot of
I think
these
you bring
Trump
up a really
bets,
important point. Yeah.
a lot of the Trump bets, like even crypto, speculative tech, ARK, small caps, they actually wouldn't fare well if his policies end up being inflationary and rates stay higher. That would pressure a lot of these sectors that people are piling billions into. We are literally seeing billions of buying in ETFs.
And
all
look, the
these
bond
trades.
market's closed today, but the bond market was sending the signal last week that, yes, that there could be some concerns about inflation.
Yeah, and we did see TLT, which is a 20-year ETF, falling a little bit, down 0.5%. So a little bit of some price discovery there in the bond market. Even though bond markets are closed, you can see that the ETFs were selling off just slightly today.
Well, a sense of deja vu overwhelmed Wall Street over the past week as Donald Trump's election win gave the stock market a jolt similar to what happened after his victory 8 years ago. As you just mentioned, small caps soared, banks leapt, and the S&P 500 had its best election day in history and strongest week in 12 months. Alexandra Semenova is equities reporter for Bloomberg News. She joins us here in the Bloomberg Interactive Brokers studio. What can we learn about the equity market reaction to Trump re-entering the White House if we look back at 2016?
Yeah, so similar to 2016, if you look at the reaction right now, everything is risk on, right? But it's mainly being driven by the fact that we had this enormous hurdle of uncertainty kind of awaiting investors. Everyone didn't know the outcome of a very contentious and tight election, and now that's been resolved, so that kind of paves the path for equities. But investors are telling me, strategists, analysts, that this is not the trade right now. Just because everyone is risk on right now doesn't mean necessarily that that can continue, because the equity market is in a very, very different place than it was in 2016. Obviously, you know, people are bidding up banks, they're bidding up small caps, so in that sense, it's similar. But the market was in a place where it needed a boost. It needed a growth injection at the time. There were recessionary signals throughout 2016. You came into the year with stocks down until they rallied into the end of the year. This time around, we have a 26% gain in the S&P 500, stocks at all-time highs. So can this risk continue? At this point, it's not clear.
What are strategists saying about the risks ahead? And are they related to a Trump presidency, or were they always kind of present given the macro environment?
So it's kind of a culmination of both things because, you know, at this point, seasonally, the setup looks really good for stocks into year end. You know, equities tend to rally in the final 2 months of the year, especially post-elections. However, yields are approaching 5%, and a lot of strategists are saying that that is going to be a problem into 2025. JP Morgan warned today that they're kind of seeing those higher yields weigh on risk assets once the year turns, because there is the expectation that even though Trump's policies, you know, are good for corporate America, they will be inflationary. They will be, you know, are expected to swell the deficit, and that might be a problem.
So I wonder if that keeps the policies in check. If the market, like, look, okay, the Republicans control the Senate, will control the Senate. They will likely control the House, they control the executive branch. The markets might be the check.
Right.
In the checks and balances.
So Carol Schleif over at BMO, she's the chief investment officer there, she said that the bond market could actually dictate whether or not Trump puts his policies into place, and that has really been a theme. It depends on who joins